Good afternoon. Another day in paradise. I don't know. Here, do you think I got a future as a DJ? Um,
You're well on your way, I
I
would
mean,
say.
it's crazy to have these rooms, the horrible stuff that's going on in the Ukraine. And again, we're not going to do another room about geopolitics.
Hmm.
By the way, everyone's got to become a neon expert now.
Right.
That's the item du jour. It was armchair immunologist. Then everyone retired and became an expert in foreign relations.
Macro.
Yeah,
Right.
foreign relations and nuclear war. And then we
Right.
read over the weekend that I think 50% of the world's neon comes from the Ukraine, and 90% of the neon used for some fancy semiconductor manufacturing process in the United States comes from the Ukraine. So now I suspect everyone in this room, do me a favor and DM me. If you see a clubhouse room or a Twitter space on neon, let me know about it. I think we also need to have an informal polling, and we're going to get Tony Greer up here to talk. What a treat, Tony, you're in the house. Tony, if you can talk, I'd love to have you come up and maybe talk a little bit at the beginning. I just want to let you know, Tony, people loved hearing you speak a week or two ago when we had you in here. It's one of the sessions I got the biggest amount of positive feedback on. So, Tony, if you're up to it, we'd love to get some wisdom from you. But at any rate, it's we're not going to do a room on geopolitics because everyone's got an opinion. Opinions like noses, everyone has one. The more vulgar
No.
version is opinions like assholes, everybody has one.
By the way, George, can you name a more esoteric subject than like neon? Like. I mean, literally, can you name one? I can't.
You're right. Although I will let Schmuckatelli talk about. I want to hear from Joe about what's going on the ground with the military stuff because he speaks to facts. It's not opinions. We all have opinions. So let me just ramble for a couple of minutes, and then I want to get Tony to in here because a lot's changed since he last spoke. And again, Tony, people are really fired up about what you had to say last time, and so uh, you know, people were
Awesome.
feeling it when you were talking. So let me I don't have a prepared spiel. I mean, decided to do this room a half hour ago. It's getting easier all the time. Maybe it's because of the fact that I'm a natural bullshit artist. It comes pretty easily for me. But I was reading a publication today summarizing some of what's going on. I just have so many thoughts running through my head right now. I do usually zero hedge is a bad place to hang out because it's bear porn, but the bear porn is actually in gear with the zeitgeist of the market right now. So it's actually a good time to be looking at zero hedge. Most of the time, you don't want to look at it. I will plead guilty to having read it too much over the years, but they're in gear with what's going on. So I guess Tony would say that the chart is validating the narrative that goes with it. But there was a story from this afternoon. Let me just find it. Nomura had a piece up. Everything's starting to break. We've talked about this numerous times in this room. You get weird stuff happening. Too many stresses and strains. Oil going to prices people thought were impossible. Wheat. We had Abe in this room the other day talking about how in 2 or 3 days some of these steel products from Eastern Europe went nuts. Why? Because product disappeared. I understand. I think nickel was up 80% at one point today. Someone who's a friend of this room. If he comes in here, I'll let him tell the story. But there was rumor going around that somebody was on got squeezed out, had to cough up on a $5 billion nickel position. They were hedged incorrectly or something. Who knows if it's true or not? But he explained to me that $5 billion would be 10% of the entire value of the nickel market. And what's more important to me than whether or not the story is true, and I know Tony will be a fan of this, is Stan Weinstein, a professional taper who's still around, and used to say, it's not the news that counts, it's the reaction to the news. So I suspect that just a lot of people who are stuck, who are still thinking about how much they can make, FOMO, instead of worrying about how much they might lose. You need to have the defense on the field. This is not the time to be playing offense. If you're crazy like me and you want to short stocks, that's fine. But again, we always try to help the average person in the room. Like, what do they do? Be in cash, get off margin, be defensive. Let the market come to you. Um, so I just think it's a time where the Hippocratic Oath. If you're a doctor, first rule is do no harm. Um, Let me read to you from a market commentary from someone who's been in this room. I'm not going to disclose his name, and I'm going to then use this to turn. Tony, I'm going to tee you up because I want you to speak. For those of you who don't know him,
Gotcha.
Tony is proprietor of TG Macro, longtime street veteran, ex Goldman Sachs, and there's a whole bunch of other stuff, but I forget it. In any event, smart guy, one of the best guys on the street for getting a feel of what's going on. And what I like about Tony is, some guys are just pure chartists, and some guys are pure macro bullshitters, and never the two shall meet. But Tony is actually able to put together, integrate the two for a sort of more holistic picture of what's going on. At any rate, so Tony, I'm going to give the floor over to you for a second. I just want to read to you a stream of consciousness written by it's a daily note from someone today. Says this morning I said S&P is below a certain level. It's the next oh shit level. Now we're below that. Many are calling for a relief rally, a pullback in commodities. I think that's plausible. However, the timing is impossible. If we close below those aforementioned levels, you have to start thinking whether you've considered everything. Private equity markdowns to come in big hedge funds. Those are going to leave a mark. Putin's scorched earth policy, taking down the U.S. dollar by killing their market, destroying dollar hegemony. U.S. economy falling into recession as the Fed nearly has to raise 25 basis points. The market, and this is now he's stealing from Walter Deemer. Market is made to make the most look foolish most of the time, especially the Fed in this case. Mr. Market's annoyed with Jay Powell, as you can be sure. Finally, and I will get to this more later, and Tony, this is something I never heard of until today. You may be able to speak to this. Bernard Baruch's continuity of bullish thought must be considered here. This is the concept where everyone's, on the beach, happy, everything's going up, they're all bullish. And all of a sudden you get regime change, toilet gets flushed, and now everyone's like, they haven't adjusted their thoughts. But anyway, continuity of bullish thought must be considered here. Buy the dip, FOMO, fools, charlatans who never saw a bear market, refuse to accept the changing of the guard. The market leadership is nowhere right now. And here's the killer question. Be careful out there. If someone postulated that there's a Lehman moment in the shadows, could you really argue against it? And with that happy introduction, Mr. Greer, Tony Greer is in the house, the one and only. So, Tony, you don't have to answer that question. You can talk about whatever you want. People want to hear from you. So, Tony, welcome. Good to see you again, my friend.
George, thank you so much for having me on, my man. If there's one thing that I want to speak to, it's about, putting the narrative together with the price action. And, I'm getting more and more emboldened, by the call that continues to reiterate itself. We've been calling it the great rotation, where commodities and hard assets, metals and mining, et cetera, are all have the potential and are lined up to rally. Technology is lined up to catch if we're going to continue to, nudge rates higher. And today, man, I mean, the reaction today was fucking epic. I mean, excuse my French, but it just was, right? Like, today was a watershed moment that should have shaken anybody to their core that thought that just buying the tech dip was going to work, or that, maybe, fading a commodity move just because the price is too high was going to work, and looking for a, cyclical pullback, God forbid, or something like that, because I don't think that's the right way to be looking at this commodity market. So when you look at today and you have oil services up 8%, crude oil up 2.5%, the BCOM up 3%, and you have FANG stocks off 5% to a dangling new low for the move. Every sector of technology got absolutely butchered, and they're now in technically worse shape than they were on last Friday's close, which is, an interesting way to start the week with, and we're seeing now, George, that, that weight of technology, right? It's got to come out. It's got to come out right now, period. End of story, right? Like there's no way that the asset manager, a responsible asset manager, is sitting in his chair right now and saying, yeah, I'm still fading this commodity move. You know what I mean? Like that's irresponsible right now. So what's more responsible is, kicking the tires on your pad, looking at today's moves, at what moved today in response to, the decades worth of news that we got over the weekend, what happened today, and then compare that to the way things are steamrolling on the year, right? So you look at what happened today and then look what it is on the year. It's the same thing. What's the top leading sector? And my selfish sector that I'm following on the top of my leaderboard? Oil services, right? Up 52%, XLE up 37%, BCom up 32%. That's the top of my selfish little leaderboard, with XME, metals and mining, IGE, natural resources, and gold metals and mining right behind them. They're all up 20% or more year to date. Dangling off the bottom of my year-to-date leaderboard is Ethereum, which is getting monkey hammered down 32% because the laser-eyed people realize that rates are going to go up and this thing is going to be challenged, right? Cannabis companies just out of favor right now, bidless through last year's low in the IPO price. Social media falling apart. Internet stocks outside. You even got semiconductors off 5%. I mean, if this doesn't shake you up, right? That's the bottom of the leaderboard is cannabis, social media, internet, home builders, which I haven't discussed yet, cloud storage, and semiconductors. Those are all off 20% on the year. And I'm just trying to think of what would happen between now and the end that might reverse that, because I've got a long list of things that say that this is going to be exacerbated and it's still got time to pick up steam. And I'm talking about this rotation. So that's my most earnest take on the market. It looks like there's a lot of things screaming at me, George, and I'm finally starting to put it together. I wasn't on the gold train. And after listening to so much content over the weekend, I'm kind of realizing that what's going on in gold might be front running, the social unrest that we're going to see on our television screens more than it is about, the Russia-Ukraine confrontation and being a little flight to quality while that's going on. I think gold is pricing in future civil unrest due to these commodity prices and food prices raging. And probably the fact
so Tony, I have to interrupt you. I'm sorry. That's what people love when I interrupt. So it also gives you a chance to rest. So a good friend, Michael Guyad, so this is about optics and O'Hare. I need you to weigh in on this. I think in Mount Gox, and anyone else who wants to speak on this, I think Tony needs an image consultant. So Tony, you're kind of like a middle-aged Caucasian from Atlantic Beach. And by the way, look up above, please, at the title of the room. I think I got that right. Atlantic Beach, is that the way you want me to refer to you? So in any event, you're a middle-aged Caucasian from Atlantic Beach, and you're just not relevant. So I think you need to take a picture out of Michael Guyad's book. And he's got those, he doesn't have laser eyes in. He's got, that funky thing. You got to go look at his avatar, whatever you call it. He's got gold eyes in there. He's got gold eyes in there. So Tony, go ask Guyad how he did it, and ask one of your kids how to do it. You need to put gold eyes, and that could be a standing joke between Guyad and you. All right, I think gold eyes. Tony, we have to rebrand you. Okay?
Yeah, that might be it, George.
You're relevant.
That might be it. A facelift, a new haircut, and a rebranding. Sounds like
Michael had one barrel of oil and one 2x4 sticking out of each eye.
So, Tony, don't worry. We're not going to ask you to. We're not going to ask you to be woke and go broke. If you could just put the gold eyes in, we're good. We're good.
George, you got it. You got it, man.
All right. So no, but seriously.
Yeah.
Could you talk about this point that I raised and you seized on, sort of the integration of the charts? Trade what you see, not what you think, but not just in lobotomized, complacent fashion. It's like, does it make any sense? Like, how is the market speaking to you? And when you were talking about how over the weekend you listened to a lot of things or read a lot of things that kind of made sense, and whether it's people realizing, oh, wait a second, keeping, the Russians had all these hundreds of billions of dollars in the U.S. SWIFT system, and wait a second, now they can't get their hands on it. Wait a second, you mean maybe this is going to be when finally the Russians, the Chinese, the Iranians, and do I dare say the Europeans, who are rooting for the loss of U.S. dollar hegemony, maybe this comes together and maybe the dollar's not the ticket anymore. I mean, these are kind of like soft observations. Maybe gold is, as much as our maxi friends would like to say it's a store of value. Most, Bitcoin patently is not. Gold certainly is. And maybe the idea that, Tony, you're old enough to remember when, okay, and I think I don't know if you were at Goldman or where you were in 07, 08, but I had a monster year in 07 because I had the old Texas hedge on. I had two sides of the same coin. I was market neutral, Tony, and don't spit out your coffee. I was long stuff. I was long stuff, which basically had to drill for it. I owned it. All right, as Dennis Gartman would say, if you dropped it on your foot and it hurt, I owned it. And the flip side was I was short credit. All right, so all the banks, brokers, Goldman, et cetera. All right, and I mean that was like. Run a hedge fund. I shouldn't really talk about my past performance, but let's just say it was one of the best years of my career. And to me, Tony, sort of this, and I haven't been drinking yet. I open an ice bottle of Italian wine later. And by the way, we will come for another lunch. This time we're going to do a dinner so we can drink.
Nice.
To me, it kind of feels like, and maybe you can put the charts together, because I think you're going to tell me technically it looks right. What's better than owning oil stocks to all my Canadian oil mafia guys, which, by the way, Tony, I think there's a t-shirt on the way to you. What's better than owning Canadian oil stocks, owning energy stocks? It's being long energy and short ARC. All right.
Yeah.
This is a market neutral trade in quotation marks. All right. So in similar fashion, it just kind of feels to me, and people are sick of hearing about long energy short ARC. By the way, in the last 3 months, that trade's up 100%. And I think it's going to go another 100% this year. And I'd like you to look at that chart for me, because it just drills into a lot of macro concepts. And the technicals, to me, are lining up as well. Gold, all right. But the other trade, a newbie, am I diversified? Hey, Mr. Greer. Yeah, so Tony, this is George from White Plains calling. I'm a first time caller. I'd like to know. I'm long the XOP and I'm short the ARKK. And then the other spread trade I have on from that nice man George Noble in his spaces, I'm long gold and I'm short the XLF. I'm short financials. Am I diversified? What do you say to that last trade, Tony? Being long of gold and shorting financials, kind of like the two opposite sides of the same coin. This kind of speaks to the definancialization. We've had excessive overfinancialization in this economy. We've also gone from the real to the surreal, from the short duration to the long duration, from what's in the ground into the metaverse. And by the way, if anybody wants to come up, and I know we had one the other day, I can't remember what room it was in. Someone was talking about mortgages in the metaverse. Oh, that's good business. What could possibly go wrong? But anyway, Tony, what do you think about? You can tell I'm on fire today. I'm really fired up. What do you think about sort of long the gold against short financials? Because I think part of this whole thing is financials, what's starting out me as a commodities thing becomes a liquidity thing, maybe becomes a credit thing. The toilet's going to back up all onto the financial sector. And if I put my macro hat on, I say, well, the Davos crowd's not going to allow it to happen. They'll print more money despite what they're saying right now. This too shall change. Point being that, if the world doesn't come to an end, we're going to have much higher inflation. And so I kind of like gold against the financials. What would you say to that, Tony? Or is that being too clever by a half?
No. I would, on this side of the reaction to Russia, I couldn't agree more, George. And I only say that because, it's not until we started pushing all the Russian stuff into CDS, explosion territory, that trade started to pan out. I may have faded that prior to, like I said, the financial reaction to Russia. But the financial reaction to Russia happened. And so you have to consider that the banks are going to be in trouble. I mean, look at the European bank index. It has fallen from 120 to 70 in about, this year, just call it, right? So it's off whatever, 100, almost 100%. And they're technically on their back. I'm not smart enough to figure out where the defaults lie. I don't doubt what you say, though, that it's all going to wash up in the financial sector. I would rather have the short in the financial space, in the tech space, just by, I think that's got more downside. And I think that, I put it this way, I just think that those are jaguars that have fallen from the tree, whereas financials may be a little bit tougher to fight going down. That's all. And I could be wrong on that. I have no strong.
Tony, I love it. You know what's funny? It's kind of like, stay with a girl you got, all right?
That's what it is. That's what it is.
And it's, I'm getting kind of bored of Kathy, So I'm
Yeah.
kind of like, no.
Yeah.
Kathy keeps putting out. I'm sorry. I'm gonna get in a lot of trouble here. We are setting new standards of decadence with this one. But what the hell? Let it rip. But no. But seriously, this whole Ukraine thing has distracted attention from the main event, the existential, shifting of the tectonic plates, where she's just going to get totally hosed. Tony, let me ask you this. Just forget about the macro narrative. You just look at the chart of ARKK, or maybe a better assignment, like when you go through, I'm sure you're familiar with most of her names, aren't that many. So whether you look at the chart of ARKK, and when it was at 120, I said 60. Now I'm saying 30. Whether you look at the chart itself, or you just go through, the top 10 or 20 names and you kind of put them together or whatever. A couple questions. A, is there anything to buy remotely in her sandbox? And then B, whether you do it from the bottom up or just looking at the overall chart of the ARKK, where could you see ARKK going to? Just look at the chart. Forget about the macro narrative.
Yeah, I'm 40 bid. If I was short, I'd be 40 bid to cover, and I'd be fine with that move. Looking at the membership, I remember the last time I checked, I guess there was so many stocks that were just the story, George. Illiquid stocks that had already curled over, and you're reading her. You're reading her filings, and she's adding to these names, and they're illiquid, and you're like, oh, okay, let's just set a ticking time bomb here. And the time bomb is imploding now. So, I would be 40 bid to cover some, just because the ARK spent 2018, 2019, and most of 2020, bobbling around $40. So it makes sense for me to take some off the table at that level. But I'm not sure that it stops there. Yeah, no, I hear you laughing at me because you don't think it stops there.
Tony, man, I love you. I know this. You put that disclaimer at the end. 40 bid to cover some. You didn't say all. You said
You
some.
gotta have a disclaimer. You gotta have a disclaimer.
Absolutely. That's how you trade that. Are you kidding me? You don't let some ride if you're short from here. That's a jaguar that's going to fall from the tree and hit the ground.
All right.
If my thesis on the year is right, George, that's my point. All of this money is going to have to come out of technology because it's out of favor and they don't know it yet. Right? Some of the money is going to be smart money. It's going to go right into natural resources. Some is going to be dumb money and get recycled across whatever sectors of the S&P, and it's not going to work out for them. So that's how I feel at the more downside.
So as those of you who follow me on Twitter, most of you do, we wouldn't be in here. As you're aware, I got into a kind of a big dust up the last day or two, calling certain people out on Twitter. And it wasn't done deliberately in terms of trying to fuck people up, but it's trying to. And if anyone wants to come up here and has issue with me, that's fine. I'm just for truth, and I'm sick of the bullshit and the fraud and the posturing and the lying that goes on Twitter. And it's just outrageous. The shit that people say, like you'd be in fucking jail if you worked at a real firm.
Yeah.
And I just won't have that. People say, well, he got all his other picks right. Who the fuck writes notes like that? Okay. And they go, well, it's just a game. Fuck you. Or not you, but fuck him. All right. At any rate, so Tony, one of the things I want to ask you about, I don't know why you just triggered me. You talked about, I love the way you put it, the shit's out of favor, they just don't know it yet. I actually think, and you know how this works, Tony. You dig a big hole for yourself at the start of the year.
Yeah.
And you look at the tectonic plate shifting. And all I want to speak about, and I'm not picking on Tiger Global in particular, although I wish I was 1/10 as wealthy as those guys are. But more from the standpoint of, whether it's Melvin Capital, Tiger Global, Coal2, Well Rock, it's all the same crap, right?
Yep.
And all this stuff, it's long duration, illiquid crap. And it's kind of like, they were just marketing up themselves as they went along. And index buying is the biggest momentum trade out there. And now you see the FANG generals breaking down. And forget about the next week or month. And you may say, George, you're going too far. I don't know. But I actually think this is going to be the year of epic blowups in hedge fund land. And in particular, those guys who had a free ride on this long duration trade, all right, are going to get absolutely destroyed, all right? I note with interest. Tiger Global reopened for new money. I wonder why that is, right? So you got all these unicorns, and I've lost count. Maybe someone smart in the audience can has the number. These hundreds of unicorns, which are worth over billions of dollars. they're not going to be, if they need money, they're not going to be able to get it, or they're only going to get it at seriously down rounds. And I think when the redemptions come, there's only going to be one problem: who are they going to sell to? Now, I'm not worried about the end of this quarter. This shit all just happened, as you say. These stocks are out of favor, and people don't know it yet. But as the year wears on, Tony, and if you're half right about how you think the market's going to play out, I think we could completely be looking at a complete wipeout, complete and utter wipeout in some of the mighty and glorious in this, sort of fang trade that's gone on for years and years, and the posers, the mutual funds, and the index funds for that matter. Keep in mind, Tony, that's something I want to ask you about. And I talk too much, I know, but last year you saw more money coming to equity funds than in prior 19 years put together.
Yeah,
it's all index bullshit. It bit up all that fang crap, right? And to me, it's kind of like indexation. It's the biggest Momo trade out there. So there's a lot to unpack, I know, but just thoughts on, as they would say on ESPN, was it Chris Berman? Tiger Globe. Kathy Woods could go all the way. Okay,
yeah.
Like this shit could go end zone. So help me here a little bit, Tony. What do you think?
Yeah, I mean, George, I got to talk you off the ledge a little, right? Now, I don't disagree that there could be some blowups this year, but if you're talking about, you're really talking about the best and brightest funds out there, right? Quote unquote. Those are the guys or whatever that everybody in the hedge fund industry wants to go work for, and I understand that. I mean,
Wait, did you say best and brightest? Did you just say the luckiest guys who raised the most momentum, who had the best momentum going for them? Go on. Sorry.
All right, it's a combination. Okay, fair enough. It's a combination. But my point is this: it's like, George, this writing is on the wall, and if these guys aren't picking it up and figuring out how to adjust rather than risk extinction, you know what I mean? Like, that's something that's unacceptable. And I'm not sure how many. I don't want to bet on the funds blowing up. I want to bet on their positions blowing up.
Okay. As is my want to always overstate the case. Okay, but if you're Melvin Capital, just to pick on him because the numbers are well known, and you've dug such a big hole for yourself. All right.
Yeah.
Okay, like you get up off the floor and then he slugs you again. Okay, you're not getting up. Okay.
Well, I got to comment. I got to comment to that. Put it this way, George. You've seen my view matrix. You see how I'm positioned. You see how I came in positioned on January 1st, right? It's working out very well. I'm short Qs. I'm short retail. I'm short social media. I'm long the freaking kingdom of natural resources stocks. I've been selling into this rally, trimming into this rally, and now I'm a fucking nervous wreck that there's something that I'm missing. And I came in with the right positions and am crushing it on the year so far. And I'm still like, oh my freaking God, like, how am I going to get into this trade now? You know what I mean? So how do you get in if you're down 25% on the year? That's my only comment.
I know. And you know what the problem is? It's sort of like you're streetwise. It's like, how am I going to get screwed? You're looking over his shoulder. Let me find the next resource trade. No, there is nothing to replace resources. Let me find the next thing better than Kathy with the short. No, there's nothing better.
Right.
Now, there may be friends and cousins that come along for the ride. So now you're going to have the consumer stocks, the housing stocks, and the financial stocks joining Kathy on the elevator ride down.
Yeah.
But the George just getting bigger is what you're saying.
Yeah, George, Tony makes a great point though. It's the gyrations are so massive right now that this thing could like go one way or the other quick. And if you're short this market, if you're short these tech stocks, you're short these high flyers. I mean, or the previous high flyers, that could be problematic. So,
I couldn't agree. I couldn't agree with you more. And that's careful. And by the way, I hate overused phrases. Oh, this is another one of my piece. I'm gonna go on a rant now. Rant warning. Okay, I hate fucking overused phrases. All right, they're all over the place. All right, like if anyone in this room, we have to have a rule. Nobody for the next 2 hours is allowed to use the word iconic. All right, I will throw you out right away. Okay. If I hear the fucking phrase "abundance of caution," okay, that's the new CNBCism. Okay. So it is because of an abundance of
optimistic. Cautiously optimistic.
So Tony,
hey guys,
Tony, it's only because of an abundance of caution that I'm not being a pig and you're not being a pig. All right, but it's like, you know how like when things go too far, like you can make one or two mistakes. You can either you can leave the party early, right, and then you find out after you left it got really good. Everyone was taking off their clothes and shit was happening, right? Or you can stay too late, and what happens? The cops show up, you're busted, You're on the front page of the New York Post with a paper bag over your head and handcuffs and your hands over your head, right?
Yeah.
So you
So
can make one or two mistakes. The problem is I usually leave too early. Do you tend to leave early or stay too long, Tony?
Early. I'm an early guy. I know that I usually, I pride myself, George, on not being around for the slide because I've been around for the slide. I know what it feels like and I know how to get a sniff for that coming. And so it's like I get to these points where, it's kind of tighten up the stops kind of thing and everything comes right up close to the market. And I have no problem if I feel like I'm in a crowded trade saying, yeah, we're a little bit off the best, we're a little bit off of my high water mark, but that's how all my trades go. So sell this
Right.
now before the slide comes. And so
Right.
that's always my thing. I'm always happy to leave a little bit of profit on the table because I don't want to be the one that's long it when it's down 12% and it's obvious everybody's got to be out. That's where we
All
are.
right. All right. I'm going to
hey
ask one
George,
question. I'm going to ask no. Oh, here,
George, can
hold
I
on.
say something here just very
No,
quickly?
no, you can't. It's my room. I'm going to ask one question, then we're going to open up the questions. So, Tony, we had our good mutual friend Tommy Thornton in the room the other day, and he rightly pointed out with the sentiment index at 96 on oil, blah, blah, blah. It's like, you can't do it here. Like, it may go up, but you just can't do it here. It's like he wants the trade to come to him, all right, not the other way around. And I'm just kind of curious, like, if you were starting a new firm tomorrow, someone said, okay, here's $100 million, right? Okay, you gotta. I can't use that phrase, put money to work. It's another one of those phrases I can't stand. Okay, you gotta get invested. All right. So just for everyone in the room, forget about your legacy positions. Forget about you're a smart guy and you got it right on January 1st. Mr. Market doesn't. No one doesn't care about your legacy positions. New client, 100 million. What are you doing? You're going all in. You're just going to put 10% out there. You're going to go cautiously. You're going to wait for the entry point. I mean, I agree with Tommy Thornton. I mean, chasing something with in the DSI daily sentiment index at 96 is just not a good way to roll. So, what would you do, Tony?
Yeah, no, I put it this way. I've got my tactic is yes, I'm definitely bidding below the markets now. As I mentioned, I've seen a bunch of Icarus prints on the screens today, meaning the ones that flew too close to the sun, they gapped open higher, they ended the day negative. There's a little bit of weight that can come in here, and you can buy things cheaper at some point. Now, at the same time, alongside that set of bids below the market, I've got my egg timer. And the egg timer has got a timer on it. And every 3, 4, 5 sessions go by that I don't get hit, I have to take that lowest bid and make it, and move it to the top and say, okay, that lowest bid you can forget about. Bring one closer to the market. And the egg timer goes on again. And if I don't get hit there, that because you got to get into this market, you don't really know. This could go straight up for 6 months without there being much of a pullback.
So you basically, it sounds like a trailing stops kind of what you're using.
It's a trailing stop with and then once you start buying it, you want to pyramid as best you can. But like I said, all the bids have got to have egg timers on them because if you don't get it, things are going to get farther away from you. And there are certain markets right now that they may get away from you and not come back for 6 months. And so you'll be shit out of luck standing there watching this trade that you try to get into go right by your whole face. And there's no point in doing that. I mean, we're here to trade. The market's open, right? Trade.
Yeah, and one last question. I keep going more question. Just on the way up, like the tech thing, last year was relentless on the way up. It never really let you in.
Yep.
So to your point, I mean, you're saying there's a chance like this market may never let you in if you're waiting for the big pullback in energy and materials?
Yeah, I do. I tell you, look at nickel. Does nickel look like it's going to settle back into a range, George? You know what I mean? Like nickel is gone forever now, man. I mean, it's going to be years before that settles back into prices that we've been watching for the last 5 years. This changes calculus on a lot of things.
All right.
So.
All right. So now we go to questions. We're going to let. So I'm going to have O'Hare speak first. He's got a question. If not, we're going to do Mark Newman, and then Schmuckatelli, and then capitalism. So O'Hare, you got something for Tony? Or you're good. You want to let Mark go for it?
Yeah, I'll let him go. But I got one thing I just wanted to say to Tony. I think that's fantastic. That train of thought is fantastic. I think people need to listen to kind of refreshing words from a seasoned veteran like yourself. I completely agree with most of everything you said. Let me just ask one quick question with regard to precious metals mining stocks. You had just said basically that if you don't get on board now, you may be waiting a while. And I have a feeling that the precious metals mining stock space, I think that's one of those areas, much like the energy space. Everybody's now hopping on board, trying to catch that late train,
Yep. Well, I put it this way. I'm going to say that I still believe, gold miners look way better now, so I'm not going to fight you there. Industrial miners, to me though, the story is a lot more compelling, and they just divide very clearly to me in terms of what those trades are pursuing. Right. And so if I'm pursuing the gold trade, then that means in the miners that I'm pursuing stagflation, and I'm pursuing that actual, having to own gold if there's unrest bubbling up. So I think that that's what I'm long gold for. If I'm going to be long metals and mining, man, I'm long that as we, pivot the center of, economic gravity from the energy space, to the U.S., which used to be in the U.S., which is now getting taken out of the picture, to the metal space, which is everything that China and Russia own. And so that's where they're trying to make metals the center of the necessity pool for the commodity trade now. And so that's why, XME feels all the more pressing. And if anything, my last comment, I don't want to go on all day. If anything, the same guys that have been long gold miners for the last 30 years, they're still long gold miners. XME metals and mining, nobody's got them. That's just
so
100%, 100%.
All right. So before we go to the next question, for anyone who's interested, I mean, Tony, and again, I'm doing this because he's a friend and he's a font of wisdom. No commercial relationship, but TG Macro, he's always looking for new customers. So if you're interested, contact him. Well worth it. Strongly recommend.
Thank you for that endorsement,
Yeah,
George. I really appreciate that.
Probably he's going to yell at me, but I'm going to say Tony will probably give you the Twitter Spaces G Noble discount if you operators standing by till 12 o'clock midnight. This is a limited time offer only. Okay, all right.
You got it, George. You got it.
Right,
I'll make good on that because you're a good man.
Let's move on. So we got some really smart cookies speaking now. We got my good friend Mark Newman, who's a sell-sider, been around a long while. He's a veteran of Japanese bear market. He was in this room a couple of weeks ago. Mark, I don't think you were in the room, but I read anonymously your daily comment today. I thought it was brilliant. And then we're going to go to Three Aces, and then we're going to do Schmuckatelli. So, Mark, good to see you. What's up, man? Mark, you there? Unmute yourself, Mark.
There we go. Okay, got it. So I just appreciate the time as always, George. I just wanted to touch on something that Tony was hitting on earlier. And, so you asked him, I think, what would you do at this stage? And Tony's concern is that things have gotten a little heated and he's sort of waiting lower. One of the things my folks have always done is what we call Schmuck insurance, right? So you're riding that long that you've been riding forever, or for not forever, whatever your duration is, but forever for you. And you say, okay, it's had an amazing run, whatever it is. Oil today, okay, up at 120, 125. That's to me where, instead of taking some off and walking away, is I will sell the stock and I'll buy the calls. And I'm not saying that I'm buying cheap calls, volatility wise, or, at the end of the move, it's overbought, whatever. But I want to have those options on in case I don't look like a schmuck, in case it keeps going higher. And now, obviously, I've gone from Delta 1 to Delta less than 1. So if it goes down, I get less long. That's my way of staying in these trades. And yeah, it gaps up, big winner. Okay. If it fades, I took my full Delta 1 off and I have tiny deltas on there, and then it rolls down to my level where I want to buy more. Right. So that's a way of staying in these trades. And look, I think it works on the short side. Tony said it about ARKK, right? He's short here, let's say. Okay. Gets down to whatever level, cover your short, just buy a put. Now they're not going to be they're not going to be cheap, volatility wise. They're going to be expensive. But if Tony picks that level and maybe 40, I think it's like a Fibonacci retrace or whatever. Maybe it gets there and then you buy the puts and it might rally. Okay. If it gaps lower, you're still long those puts. So it's sort of a way of sort of staying in that trade without risking all that you have made. Right. And I think that's a good way to sort of, like you said, don't feel like a schmuck. And then, the one other thing I've been hearing here about the energy and the commodities, I do think that it's right. Like if Kathy Wood today, I think she said, I got it wrong on oil. That could be where the top is short term. Okay. But I think some of us in this room, I know I believe this. If these energy stocks come in further, come in at all, they're not coming in yet. But if they do, I want to probably be a buyer, and I don't necessarily recommend selling puts to anybody because it's a risky thing and you got to know what you're doing. But to me, the target purchase of whether it's an ExxonMobil or a Laredo Petroleum or whatever, if these things stay, if oil stays bid like I think it should or would, I probably want to be selling some puts in these names where I am not long enough. And it's just a way of sort of collecting some income, waiting around, and finding a target price where I'm a buyer. Now, look, I wouldn't be shorting puts in the index, right? I wouldn't be shorting puts in the
Right.
Qs, but it's a place where you can pick a spot and say, I don't know, LPI. I mean, I'm involved there. It's a really great name. Like maybe I'm a 75 buyer. It's a volatile name, so maybe it's lower, but that's a way of sort of being there waiting to get longer in these names. Now, it could not return, sure. Like it couldn't come down to that strike price and it could stay bid. Yeah, that's fine. But at least I'm collecting that income along the way. And again, I have an underlying position. So that's just levels where I'd add more in these names. And then the last thing I just want to talk about quickly, and I know.
Sorry, Mark. I'm just trying out my Mad Money soundboard.
Thank you. But the other thing is George was saying no adages in the chat, and I two things. One, George taught me this a long time ago. To know and not act is not to know. I'm sorry, but that's one George gave me a long time ago, and I'll tell you, it's okay to not know. It's okay to sort of be like, what the freak is going on in these markets? I can't figure it out. It's okay. It's not okay to throw money into the market on a whim because you don't know, or because you just like, I got to be involved. It's okay to not know, and okay to step back and say, when I know more, I'll play more. That's fine.
Okay. So Mark, so Schmuck Insurance. Okay, so I know, or at least I think I know, and I think most of the smart people in this room know that ARC is going to get cut in half from here. Now it's oversold, yada yada yada. It's below the moving average, blah blah blah. All right, like I will slip my wrists if ARC gets cut in half, and because I'm not paying attention, I overtrade it. I wind up not making any money being short ARC between now and the end of the year. So I'm going to ask Tony first, and then Mark second. Tony, how do you, if your core belief is that ARC's going to go down or energy is going to go up? I mean, do you do the Schmuck Insurance thing that Mark was saying, or what would you do right here, right now, Tony?
I actually, in this particular case, I like Mark's strategy of sacrificing some capital to get anchored. I don't think there's anything wrong with that. I haven't looked at ARC volatility, so that I'm sure that it's puffed out at some level, but it seems to me like buying a put to just, anchor yourself. It is like to say, like you said, if you said to know and not act is to not know, then his strategy is perfectly acceptable. It's not my particular taste, only because I'm not as comfortable with options as he is, and that's not how my book is designed.
Yeah,
but it sounds like a totally plausible way to
right. Okay, so Tony,
get something on.
Yeah, so Tony, since you want to screw with the options, what would you do? You would just be sure, no matter if it's up or down, you'd always want to have a little bit on the sheets, just so you're participating. You don't forget about it, and get bigger when it backs up against you, and get smaller and when it has a whoosh. Like, what would you do?
Yeah, it's definitely plotting that out, George. We've traded through bear markets before, and you don't want to be the guy that barfs out your first short leg into a hole, and now that's the first day of the intensely steep, short in duration, short covering rally, because you don't know, you don't ever know when those are coming. Those are often driven by absolute sentiment, getting red lines, right? And we're getting close to that now, so it's a really difficult choice to make. So, but yeah, I'm definitely being patient. Put it this way, if I'm shorting tech, I know that there's going to be some kind of a retrace. At the very worst, I'm waiting for one or two green, or call it 2 or 3 green days in a row. That I can wait for.
Right. Okay. So I'm really glad we got 2 really sharp guys here. I'm gonna same question for both of you. So Mark and Tony, because you're both market animals. So we know, or we expect that there could come a time any day where ARC's up 10%, energy's down 10% because there's rumors of a ceasefire, or Putin gets taken out, or God knows whatever. All right. But you take a look at the rally we had. It seems like ancient history now. Off the January. In January lows, you rallied for 2 or 3 weeks, but it really was pretty piss poor. Yeah. And bear market rallies come with the territory. John Roke's not in the house, but Roke put out that great thing where he went back and did the calculation from March of 00 to March of 2000 to October of 2002. 649 trading days, if I got it right, and 306 or 46% of the days the market was up, even with tech going down 80%. You had 10 rallies of over 15%, 15 rallies over 10%. So,
yeah,
how do you deal, Tony and Mark, with the concept of you just don't want the strategic view? You obviously got to get that right, but the tactical, i.e., isn't it better maybe just like don't shorten the hole? I've done that a million times, okay? And just wait. Wait for the trade to come to you, okay? So you may have to wait a little while, and also there's also place of psychological capital because there's nothing worse than the market forcing you to do something like you're getting margin called and you got to cover or whatever, right? So what do you think of the idea of just these bear market rallies will inevitably come? And just wait. And I mean, I have FOMO. I am lusting for Kathy. Okay, I have FOMO on the downside. All right, but you just gotta hold. You just gotta resist it. Just say no to FOMO and just wait for that inevitable backup rally to come, and then go against it. Because if you're right, and if the conviction, underlying conviction is correct, and you have both the tactical trade in your favor and you got the strategic view in your favor, then it's a win-win. So I don't know, Tony, and then Mark.
George.
Tony, what do you think?
Yeah, I'll speak to that just real quick, and then I'll hand it over to Mark because I'm interested to hear what he has to say. I will just add one thing to this: is that you usually can know that this ferocious bear market rally is actually a bear market rally by what's leading it. And like you said, you mentioned the snapback rally off the January lows. You know what led that rally, George?
It was all the garbage.
It was software first, which went down first. Software led. Home builders bounced because they were oversold from the rate move, and FANG stocks. And so to me, I mean, I wrote about it. I was like, well, look at the leadership here. It's everything that's down the most on the year. So at least you can dissect that, and that gave you confidence to say, oh yeah, have some here at the moving averages. So that's how I like to approach it, and I'm done.
I really like that, Tony. Mark, what do you say?
Yeah, I was just gonna sort of echo what Tony said a little bit there in the fact that the generals are dead. They're gone.
Yeah.
They're gone. There's no more of them. So like, let's talk about any of these Tiger Global, Coatue, whatever. They're marks on these privates. Like you said it earlier, George. Where are they going to raise their capital when they need a source of funds to make a collateral call for those shit marks they're going to get on these privates? They're not selling the stock that doesn't trade. They're selling Apple. They're selling Microsoft. It's liquid. They could raise $1 billion in a day. So that's why there's pressure here now going forward. And it's one of those things, like Tony says, okay, bounce up. And like for me, last few days, week or two, it was like, okay, if ESH2 can't get 4,400 on a close, that's another lower high. So it didn't happen. And now I'm like, well, 4,200. Well, we're below that. That's a new low close. So nothing's really changed here in the bear trend, right? And so I've been reading a lot lately, old books, and I'm looking at Bernie Baruch, one of my heroes, and I read his little thing on when to short. Make sure there's a full bear trend in place. Well, feels like you got that. I don't know. Yeah, it's not a bull trend right now. So the one thing he talks about is this continuity of bullish thought and how hard it is once it's ingrained to get rid of. And now, George, you highlighted it with that little YouTube clip of Mark Zuckerberg's sister or whatever. When you wave your FU middle finger at the market, it's a problem. The market does not like that. I've been doing this a long time. And the minute you think you're God, the minute you think, the minute your ship comes in and you got the stock market beat, the caddy check, you're done. It's game over. Yeah. So we've seen it. The Island Boys, the NFTs, Matt Damon's shilling crypto. I mean, in 5 years, 3 years, we're all in these people in this chat, this space are gonna be like, what were the signs? And we're like, we talked about all these signs. For like, you need someone to slam you over the head and someone come with a real sign, the bear market started. That's not going to happen. There's no one posting that. Mark, so I just think that, go ahead. Sorry.
I was just going to say, I would add what Tony said. What you're saying is absolutely 100% true. I think one of the things that a lot of people in these rooms, most people are trained and conditioned to look at the indices. They'll watch CNBC or Bloomberg, or they'll get on their phone and whatever app they're using. They're looking at the indices. They're looking at the Dow, the S&P, the NASDAQ. So they're looking at indices. What they're not looking at is what Tony was referring to and what you're talking about, which is underlying. Look at the sectors. Look at the individual names that have led and the ones that are lagging. And a lot of people just don't do that. They look at the indices. They see a 500-600 point rally and they think, oh, told you so. We got to buy.
And so
Exactly.
let's take that a little deeper.
Right.
Let's take that a little deeper
Exactly.
for a
You
second,
got to
okay?
dig deep.
For the
Correct.
last few years, more than a few, a couple, a handful, it's been this passive money coming to the market. The stock pickers have gotten destroyed, and everyone looks over their shoulder and said, "Oh, my neighbor's taking in 100 million today, and he's just putting it to work. And if I don't put mine to work in this 20 times sales dog shit, I'm losing to that guy." And that's part of this thing, as you say. They're watching CNBC. They're watching the indices because I'm long all these ETFs. I've never picked a stock in my life. But now you have everyone piling into these indices when the pieces of the market of stocks versus the stock market, right? There's a ton of stocks that are bear market already. And now it's just a matter of time. Apple gave its 100-day, last week or something. And now someone asked me, what's my favorite short? It might be Apple. Because everyone's going to use it as a source of funds. It's massively overowned. And if you're wrong, you can get out in a second. It's not going up to 200 tomorrow and you're wrong on your short of Apple. So it's like these big liquid mega caps. The leadership has turned, and Tony hit it. I'm telling you, we're a leaderless market, or the new leaders are FCX and ExxonMobil. So whatever it is, the continuity of bullish thought is still here. The FOMO BT dip guys, they're still jumping in here, and who's selling? Well, probably those big hedge funds and definitely the insiders. So it's like a sleep on their feet. And as that commenter just pointed out, everyone watches the indices and watches CNBC, but like the single names there's a lot of action here. The next few years are the years of the stock picker. I'm convinced.
And I'm gonna interrupt, and then we're gonna go to our three.
Yeah, I've talked enough today. Thank you so much, guys.
Sorry, hang around. People love hearing you. And by the way, I just want to let you know, Tony and Mark, you're breaking the internet because I just noticed, Tony, we've got, I think, 850 people in the room.
Nice.
It's your name and lights. Usually we get around 5,000 in total with all people listening to replays and everything, but this is one of the bigger rooms I've seen in a while, and it ain't because of my scintillating personality. So congrats to you, Tony.
All right, man. Thanks for having us.
All right.
Yeah, thank you.
All right, Three Aces. What's up, man? Three Aces.
What's up, boys? Hey, Tony, nice talking to you again. Couple of observations and a question or two. If you remember back to the Africa days when we were doing the conference calls there, my feeling about industrial metals. So I firmly believe at the 100% level that ESG is just a tool being used to transfer political and financial power from a resource that China has no horse in the race, which are the hydrocarbons, to a resource that they own 100% of, which is the natural resource supply chain via the EV battery metals. So, given the context of that, I think the thing with Russia is sort of a jacks for openers for what's coming next, unless these guys, can unroot that ESG fraud coming out of Davos. So
ESG,
I think
ESG is the main underlying cause that nobody knows about as to why Russia did what it did. I'll just say that for sure. It's on many levels. And I have more coming on this subject soon. I can't talk about it now, but I will.
Can't wait. That is phenomenal. Couldn't agree more.
Do I get to go now, George, or no?
Go ahead.
Can I go, please? Okay, yeah. Well, I just was, so basically, couldn't agree more on the transfer of political and financial power, as driven by, the pawns, the Finks, and the ESG and the Davos, syndicate of crime Inc. there. But so that's the first thing, right? So my thing is this, right? So if this is an everything bubble, which I think it pretty much is, we've seen everything bubble up and pop. And then, really, like you talked about nickel and things like that, we sat there for damn near a decade, even more than 5 years, in some of the stuff, in basically a bear market. So, some part of what's happening now, notwithstanding the precious metals, I think is just a healthy reflation of that industry. However, if I look at Martin Prang and I look at some of the other business cycle folks out there, they all pretty much say that, commodities are the last to fall at the end of the business cycle. Now, it's hard to say that we've had a business cycle with all this Frankenstein level distortion coming out of these central banks. So it makes it a little difficult to do that analysis. But my question is this: is when I'm looking for stuff here, just a layman, and I know you're a former Goldman guy, rock star. I know your background. I've spoken to you before. You are the fucking man when it comes to trading metals. But my question is this: is if I look at lithium, for example, lithium has gone straight up parabolically, similar to a nickel move, just not all in one day. How is it that these lithium stocks are down 40, 50, 60%? And I look at various different things like that. And when I look at the big picture there, kind of all four corners of the room, part of me wants to feel as much as bullish as I am on the metals and my industry and all that stuff. Part of me wants to believe, and the question to you is it possible that what we're seeing here, from an industry perspective, commodities being the industry, that this is just kind of the last part of the everything bubble, inflation and popping, because I'm not seeing it. If I look at, LAC, for example, which is a real $5 billion market cap, lithium company, it's down 55% since November. If I look at SLI, it's down 60% and across the board. And then, if this EV thing is what it is, and the commodities are what they are, why is Rivian down 60%? Why is Lucid down 60%? Forget Tesla. We know that's garbage. So for my thing is, the only thing that's helped keeping me from laying my head on my pillow at night and really kind of betting the ranch, as we say, in the public markets, notwithstanding my private investments, on this commodities trade, is I don't see confirmation of it anywhere else. That's just me. Do you have a little bit of a song and dance there, please? Thank you.
Yeah, sure. I absolutely do. And I want to speak directly to your question where, how, lithium has been up in a straight line with the commodities, and all of a sudden the ETF, the stocks, are off big. I think that they are mirroring what we might have witnessed in the death of the European, carbon capture trade, right? The carbon credit trade, excuse me. KRBN is off 36% since Russia invaded Ukraine. Now this was a market that I had just been postured to say, oh, lizard brain over here sees something going from the bottom left to the top hand right of his screen. Lizard brain needs to be involved. So I'm tracking this thing, and now the whole ESG picture starts coming undone with the Russia Ukraine story, right? We've got legacy commodity markets waking up, like uranium and coal markets, etc. Nickel going berserk through this whole reaction, and the carbon credit market is soup sandwiching, right? Like this thing is coming apart, like it's a done, like the concept is over. So, that speaks to the lithium trade. People saying, oh, maybe I'm too long and too optimistic. These electric batteries here, how the hell are we going to get that trade on the tape? So that's the only way that I could speak to that. And I can't get with, I try to avoid the everything bubble idea right now, because man, the bull market that we're seeing in metals is unprecedented in materials. I think there will probably be good corollary trades to that also. So I just don't want, I can see several sectors of the S&P being up massive magnitudes while, tech gets eviscerated. And to me, that's just not an everything bubble popping. That's all I wanted to add. It's just
and there's still nobody there,
shape.
Tony. And there's
Yeah,
still nobody
exactly.
there, Tony. For
Agreed.
sure. For sure.
Agreed. The other thing is these markets are so tiny, bro. I mean, look at tin is a 200,000 ton a year market.
Yeah.
Some of these things, they're just, it's like versus copper, 22, 23 million tons. So any kind of real money coming into this stuff is just going to blow it out,
I mean, think about KRBN trades an average of 500,000 shares a day. I mean, how much risk can you swing around in that thing, right?
Right, totally.
It's a Tony. Oh my God, Jesus Christ! We got Thornton in the room. We got Bobby J in the room. This room it's going to be a barn burner. So Tony, let me ask you. I mean, I like this Caribbean thing, okay? And a year ago, someone mentioned it, I ignored it, never heard of it. Then it goes up enough that it's like, oh, now I missed it. Then it's like, oh, pissed. Now I get angry at it because you motherfucker, you got to go down because I don't own you, right? It keeps going up and up and up. And all of a sudden, boom!
Yeah,
50% off sale. All right, and there are a lot of assets that are trading like that. So what do you make? What do you make of that technical look, Tony?
Oh man, George, they put it this way, it was not an orderly pullback in the carbon credit market, right? In KRBN, it has been nothing, like orderly. It has actually rhymed with, the surprise level with which Russia invaded Ukraine. In my opinion, I wasn't expecting it to be this aggressive. But look at it against the chart, right? And it went from something that was trading in very orderly fashion, barely ever touched its 100-day moving average, right? So if you got cute and bought the first dip to the 50 or 100-day moving average, you got blown out immediately. So that was the first lesson of, let's kind of let this thing slide and see what happens. Now it's the kind of thing where the day that it broke its 200-day moving average, it broke on such massive volume and such a massive magnitude move that you're like, ain't no way I'm sticking a bid into this thing right now.
Tony,
right?
Tony, you know what it is, Tony? It's just like crypto, because if you ask the people who own it, like, what does it do? Like,
Yeah.
what does it do? What's it worth? What are they going to earn? Like, you
Yeah.
can't get an answer from anybody. But
Yeah.
number go up. That's all they'll tell you.
What does
Number
it do,
go up.
George? It goes up.
That's right. That's right. That's what it behavior. It becomes known for its behavior. And then, so, if you weren't quick enough to catch that nuance, like, wait, maybe I shouldn't be buying the dip in carbon credits. Maybe carbon credits is over for good. Maybe ESG just got invaded and blown the fuck up. And so that there's a real possibility of that happening as you see the media and politicians try to pivot right into this and say, people.
Yeah, so Tony, on that subject right there, that's part of the continuity of bullish thought within ESG,
That's right.
Because
100%.
on the day that Russia did that thing, Jen Psaki was like, "This is why we need to redouble our renewables." What the fuck? No,
No,
that's why you need to stop doing what you're
no.
doing.
I have such a fucking dim view of society. I'm playing with you guys, okay? You know why I think it broke? You're gonna laugh, okay? Like, no amount of common sense is gonna make us change our policy. But if Elon Musk says maybe we should have a rethink, because all the morons who follow him are like, if Elon's thinking it. So I don't know. Wouldn't it be a real hoot though if a year from now, go back to your continuity of bullish thought, Mark? A year from now, after, and we're not going to get into it. I don't want to take political sides here. I'm just going to make an observation. I happen to be an independent voter, just so everybody knows that, right? I think, and anyone wants to talk about this is fine. My observation is, and I think the smart guys on the stage are going to agree with me. Most smart people I know agree with me, regardless. Even my Democrat friends, you're going to see a Republican landslide, the likes of which you've never seen before this fall. And maybe as part of that, when oil hits 200, wherever it's going, and what is it, Mark or Tony? One of you guys told me, and I read it elsewhere. Like, there's 30 Democrats not running for re-election in the House, yada yada yada. Okay, and then it's going to be, our patriotic duty to put fucking holes in the ground and drill for more oil. All right, like, wouldn't it be a hoot if a year from now we're like exactly the opposite place? So, Mark, put that in your continuity of bullish thought pipe and smoke on it. What do you say to that, Mark? Mark Newman?
Hold on, I just gotta laugh. I gotta laugh. Look, here's the thing. No. So as I said, George, we've talked about this. I've been doing I can't really talk excessively at this moment, but soon I can. I've been working on something about that whole 3-letter industry, okay? And smart people in this room for sure. We've talked to a bunch of them. What's going on here. What happens is there's just a general thought process. We know we're right. Like, look, you cannot get to future energy without present energy. So nobody has thought about that in the sense of, I want to retrofit my entire economy. After 120 years, Henry Ford and Rockefeller started the oil-based petrol economy that ended giving farm equipment ability to get rid of hunger. And now we're trying to, let's just go to solar and batteries and wind and water. Okay. It's just not very thought out. And they're on this path. John Kerry on the first day Russia invaded Ukraine. Let's not forget about climate change. Oh, yeah, that's what I want to talk about, climate change, while Putin's rolling into Ukraine, because that's the first thing on my mind. But it's just really a lack of excessive planning and more like this theoretical idea that we've been sold. And because money is free and money is printing, hey, Oh, it only costs $5 trillion to retrofit everything. Oh, what a great idea! Just money, right? So there's a whole deeper rooted situation, and the smart guy in Russia over there said, "Oh, these guys are relying on me for my energy and for the breadbasket in the
So
Ukraine.
yeah, all right,
That's it.
all right.
That's the way it goes."
Yeah, so Newman, I'm going to put you in the Wayback Machine, and I want you to talk about Japan. Um, I don't know if there's anybody else in this room who can authoritatively speak on Japan as you can or as I can. And now you look back on it now, it's a mind experiment, okay? Go back and look at those charts of Japanese bank stocks in the late 80s, on 100 PEs and 10 times book and all the bullshit with, and again, Mark, it's hard to believe we're this old. Most people won't,
I
not
know,
won't admit it, they
George.
won't know this. The Emperor's Palace in Tokyo was worth more than the entire state of California. You could look it up. This is fucking true, all right? I mean, they were buying everything everywhere, all right? They bought Pebble Beach, they bought Rockefeller Center, yada, 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 okay? But here's the point. You look back on it now, and it's like, wait a second. The Japanese market, banks were on 100 times earnings and 10 times book, and, we could go on and on about all this shit. They were the top bid, $100 million for impressionist paintings, but $100 million was a lot of money, yada, 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 right? But as you were
They
going
bought
through,
Pebble Beach.
okay, so Mark, I want you to translate continuity of bullish thought into Japanese, because going
Okay,
through
here
it,
it is. I got the simplest one, George.
go,
Simplest one.
go.
8301 JP. Okay? That is the Bank of Japan. Now, in the US, that would be the Fed having a stock ticker, okay? So 8301 JP. It doesn't really trade, and it's just a little signal, but that to me represents Japan's finances, right? That's the Bank of Japan. And so that thing in 89 versus now, it just constant one way. Okay, so they're sort of on repeat insanity, if you will. And the amazing thing to me is their advisor in the 90s was Ben Bernanke. Okay, and to me, he's the guy in the wings of the Fed for the last 20 years. Obviously, I don't remember when he actually stepped aside, but he's been it's been his playbook they've been running. Japan ran his playbook too. 10 years.
Right.
So that to me, those are like the in the view from 30,000 feet. Those are my two views.
Yeah, but Mark, that's brilliant. But what strikes me is like, if you were to say, oh, you know, like, okay, you got like Ark's going to 40, Tony's high bid. Mark, you're at 30, I'm 20, right? Or Tiger Global is going to go down 80% and lose all their money, right? Or Melvin Capital is going to go out of business, okay? You go Roppongi, Mark can tell us about Roppongi.
Oh yeah.
Roppongi was the district in Tokyo where all the Shinjinrui, that's the Japanese term, and I don't know how good Mark's Japanese is, better than mine, okay? And by the way, for those of you that are playing at home, I'm just looking at the chart mark of 8301. It was 350,000, and now it's 27,000, and that's 30 years later.
If you're a skier, you like the ski trails that look like that chart.
Yeah. So in any event, so down 90%, but more importantly, never recovered. Never ever fucking recovered. And by the way, Tony, I want to bring you into this in a second about time, because we talk about price, and I also want to get Tommy Thornton in here. One of the problems I have with the markets, one of the many problems I have, is let's get the pain over with. Every time there's trouble in Dodge, these guys ease, and so the element of time has been missing from these bear markets or corrections. And I just want to pull this up here. I read something today where, hold on, this is very important, because this is a very, and we're gonna do Greer and then Newman, and then we're gonna bring Thornton into the conversation on this, because it goes to market structure. And the reason time is important is because what it does to psychology, and then particular momentum stocks. Because, and Mark, you would know this, okay? And I forget it's one of these, Japanese military things about, I forget how it works. I'll find the quote, all right? But the element of time, the lack of momentum, the momentum itself is the reason why something goes up. Okay, I just found what I'm looking for. So someone, I don't think I tweeted this out. I will tweet it out. Someone listed here the great bear markets this century, the past 100 years. Depression, World War II hangover, Bay of Pigs, Vietnam inflation, oil embargo, Watergate in 73, high inflation, 20% interest rates starting in November of 1980, the dot-com crash, the housing bubble, and now COVID. All right, here's what you need to know. Forget about the average decline of 44%, and we're only down, whatever we're down right now. We're not, as by the soundbite indices, we're down barely more than 10%. So you all feel better now because, Wilfred Frost has not christened this a bear market. Oh, I feel better now. The piece of shit I own is down 40%, but it's not a bear market. Okay, fine. But forget about the fact the average bear market's down 44%. What I really want to focus on is time, duration. The average bear market was 21 months. 21 months. Okay. Now, if you want to be charitable, you'd say, well, the average bear market's already been doing this for a year, blah, blah, blah. All right, I'll give you 12 months. But if you look at the indices, and maybe this speaks now to the generals getting slammed, we're hardly down. We're only 2 months away from the peak. And so if I said to you, Mark first, you, then Tony, then Tommy Thornton, you know what? I give you two choices. A, the market's going to fall 20% from here. I was like, oh, no, really? Be like, oh, shit, that's terrible. Or door number two. Mark says, yeah, what's door number two? I don't want to lose 20%. All right, Mark, I got good news for you. Those lunatic bears like George Noble are nuts. The market's only going to have 5%. You say, oh, I like that. I'm going to sign up for that. There's one catch. In the first scenario, door number one, where it's off with your heads and you have a 20% off sale, then we go back to a regularly scheduled program, which is up and to the right. The second scenario, I spare you a 20% haircut. I'm only going to charge you 5%. But, and this goes to bear markets, and Newman, you got it over everybody in this room, because you're the only guy alive in this room who's seen it, who's felt it, who's not just reading about it in a fucking history book, all right? What if this market were to go down 5%, and then 5 years from now, 10 years from now, it's the same price. We just get low volatility, and the fucking thing never goes up.
The death by sandpaper market.
Yeah. So could you talk about, particularly once we had the crash in Japan? Like, the crash was fine. It was dynamic. That was exciting. But then, what followed, the mental depression, just I fucking hate this. Like, get me out of here. Can you speak to what a bear market's really like, Mark?
So I'll tell you. You hit on it there with the two components, time and price, right? Because what you really want to happen is you want the BTD FOMO clowns to say, Uncle, I can't do this anymore. I'm never coming back to the stock market. Until we get there, we're not close, right? So we've had January, February. Yeah, it was nasty. And even like November, December, I don't know, whatever. You could clarify, quantify or qualify, fourth quarter. I don't know. Was it a bear market beginnings? I don't know. Everyone was hawkish, the Fed and whatever, and that's what started. I don't know. But George, you speak to a very important point on the timing and the speed at once, because if we grinded lower for a long time, down 50 bips, sort of 1% every week for like 5, 6, 8, 10 weeks, eventually people would say, I don't know if I can handle it. But if you get a big rollover and then a bounce, then you have people like, oh, it's still alive. I can buy some. And they're still on the bullish tack. So if we're looking for a cleansing in the market, like you said, George, 21 months is like a stair step where eventually people buy and it goes down, and they buy and it goes down. And then they're like, after 20 months, Uncle, I'm done with this. I'm not buying anymore. I'm puking it all. We need that moment. And right here, right now, in terms of the timing, it's sort of ongoing, and sort of people are still buying the dips. People are still FOMO. And that's not going to get you the bottom. It's going to get you these fits and starts, as you say, the death by sandpaper. One of my favorite expressions in Japan, okay, excuse me for the whatever. It's called asa dachi, okay? Asa dachi. Asa means to stand. Asa means morning. Dachi means to stand, okay? The slang for asa dachi is the morning affliction that men suffer with, okay? You wake up, everything's strong and firm. By an hour later, it's flat and nothing. Okay. So that's what happens in these bear markets. All right. The market races out in the first hour. There's short cover. Everyone's like, this is it. I'm not going to miss this. Here it goes. And then
An hour later, we're at the lows, right? That's the wake up in the morning. Look at me. And then like an hour later, like, oh, I got nothing, right? And so that is sort of the mindset in the early stages of a market. That's like this. We wake up in the morning. Sorry, come on, guys. Work with me here. Help me out. I just had a glass of wine. Like, come on.
You're killing me.
Okay.
I just know.
Everyone here, Google Asadachi. You'll see what I'm talking about. This was the Japanese market. Here it goes. It's rallying. This is it. Get on board. No, flaccid. And nothing.
So Tony,
you may not want to Google that, by the way, folks.
Okay, well, whatever. No. Make sure it's on like your own private server, not your work server. But my point is this, and I'm serious now. It's the mindset, right? And you start out by saying, I'm missing it. Here it goes. So like I said today to some people, we're going to get a snapback rally here. We're going to get a commodity relief to the downside, and things are going to revert a little. And the people who dive in and say, yeah, oh, this is it. It's over. It's done. The washout's done. I'm in. They're the ones who are going to buy like they did at the end of January. And 5 days later, we rolled right back over, no new highs. That's sort of how it behaves. So these are the blue candles, right? You gap up or you start strong and then you close lower. That's the blue candle. That's the beauty of the candlesticks, right? You see the color.
So Mark, I understand this. You start out long and firm and then it kind of peters out.
And then you're flaccid and down. By the end of the day, you got nothing.
Okay.
That's it. And so that's how look, but think about that in the context of the mindset of the investor. It's a funny little expression in Japanese that really encapsulates what the 90s were about in Japan.
So Tony, I don't know what part of that you want to speak
Tony,
to.
I don't know how you can follow that, but everyone, I have to say, I got to make dinner for my kids, and I'm sort of on to my next thing. But look,
right.
I love this space. I'm going to be back. Thank you, everyone, and I really appreciate this. I will talk to you guys all soon.
Thank you, Mark. The answer is I can't follow that, but I'll try.
Oh, no. Yes, you can, Tony.
So Tony,
bye.
Yeah, so Tony, maybe you want to give it to Thornton. Maybe you stick him with it. I don't know. You want to say?
We got a lot of hands, George. We also got a lot of hands up. So everybody, be patient. We're gonna let.
No, I know. Here, whatever. We got a good thing going here. So Tony, you want to say something? Then we're going to Thornton.
I'm gonna be super quick, and then I'm gonna hand it right on to Tom because I'm dying to hear what he has to say. Okay, when Mark just mentioned the mindset of the investor, the only thing that I can share that directly speaks to that, right? I have had people call me directly asking me for advice about what to do with their big tech stocks, namely Facebook, Apple, and Amazon. And I'm kind of generalizing several phone calls that I've fielded from a combination of retail investors and professional investors. I tell the retail investors, I just go into the spiel, look, commodity rally, rates higher, it's going to be bad. Facebook, they already shot this general. They listen to me. And then they say, well, I feel like this is just a rough patch or something like it. And this stock is going to be back or something like it. And that's when I hang up the phone and I'm like, well, thank you for asking for my advice and then promptly telling me to go fuck off. But that's fine. You're entitled to do whatever you want. But that's the mindset of people that will call up a professional investor, get the advice from him or them that, is something they've never heard before and not even be shaken up enough to be like, you know what? Why don't I sell some of this? The answer is rather, you know what? I think it's just a rough patch. I think it's going to be back. So with that mindset, these guys are all in trouble, and I'll hand it back to Tom.
Mr. Thornton, are you there, Tommy? Please unmute.
Yeah. Hey, guys. Hey, Tony.
Hey, bro.
And Mark, that was great. I don't know how to follow up on that, but actually, today was pretty significant in the sense that it was different from the last move down. And my view has been we were going to see, a series of lower highs develop and then lower lows. And the thing that was really significant to me, and I've got a few things that the mega cap names died today. And we didn't see that give up last time like this. And when my custom index of the top 3 NDX names were down 5.3%, and compared to the S&P down 3%, and then you have even the Nasdaq 100 down 3.75%. So these guys were giving up, and they've started to capitulate. And I I'm actually looking at market sentiment as well. The DSI, the daily sentiment index I just got it's now at 11%. It hit 10 at the recent lows. And one other thing that I really like is the CNN Fear and Greed Index, because it's not what traders or investors are telling you what they think. It's actually what investors are doing. And the thing that on the last move down, there were just way too many people that were eager to buy. All I heard was, what can I buy? What should I buy? And everybody jammed right back into it and had no fear buying that dip. And it was a lower high bounce, just as expected. And so now you're starting to see more fear into the market, and they're giving up on their stocks that have been their bread and butter go-to names, and that's a big difference. The fear and greed wasn't moving down the last move down. It's now at 13%, and that was due to people were still buying calls, so the put call ratios didn't get to levels to where it was extreme fear because people were eager to buy. And so I still see lower countdowns, DeMark countdowns ahead of us. And the problem for the bears it's gonna be that we're getting to countdowns that they vary from day 9 to day 11 of 13. And so we're starting to see a lot of, I screen the S&P 500 and Eurostock 600 every day, and I'm seeing a ton of components in there with DeMark buy signals. And that just is the complete opposite of what I saw back towards the end of last year, when all I had were sell countdowns, 13s and 12s, and on the weekly basis as well. So it was a bigger intermediate top that I was expecting. So that's really the big thing. Now, I also will say that market sentiment with all the commodities, and I know everybody in here is just, they've been very bullish on commodities, but everyone is certainly very bullish on commodities. And I think that, this move today was very, very telling, because it seems every commodity, most of them, I can't look at gold. Well, wheat, I think, was limit up again, but a lot of them faded very, very hard off their highs, their early highs. And to me, that was positioning, and that was a real capitulation type move on a lot of those. And I'm not saying that the bear market or the bull market for commodities is over, but I think there was, you guys probably talked about what happened in nickel today with liquidations and that big Mongo short in this, and then I think that bled into copper as well. There was forced selling across the board, risk taking down out there. So my view is that watch out for good news. It's coming to a point in the market, and trust me, I'm like as bearish as it gets, and I am starting to buy stuff. And I know everybody's gonna be like, "Oh God, are you crazy?" But I am very, very focused and disciplined on what I'm buying, where I'm buying it, and the size of what I'm buying, because I'm not necessarily, levering myself up and buying Palantir. I'm buying 1% of Palantir, and I'm watching. I took some hits today. I'm buying the airlines, and everybody, oh God, are you freaking nuts? Well, they've been mauled, and I think that I'm getting DeMark exhaustion signals, and I'm getting very close to DeMark exhaustion signals with jet fuel. And if there's any sort of good news, and let's say jet fuel drops or something, those airlines are going to rip. And I'm not looking for them to go to the all-time highs. I'm a trader. I'm going to get the bounce, and then we're going to make another lower high bounce, and most likely have a final washout. But today was really an important day because we saw the big mega cap, and they all closed essentially, as everything, flat out on their I mean, my screen is red, like solid red, meaning it closed on the lows. But that's what I think is happening right now. We're starting to really get more capitulation because that did not happen on the last move down.
So Thornton is now, as you were talking, I don't know what it is between Greer and Newman and Thornton. We now have 1,000 people in this room. So this room is killing it. All right. Thank you, Tommy. It's brilliant as always. So now we're going to move on. We're just going to take a little detour here. If Schmuckatelli is on duty, I don't know, Joe, if you're paying attention, but I would like to get the military update. Joe, are you there? Can you talk to we updated you what's going on in the Ukraine? Again, we thank you for your service. You alone, for everyone in the room, Schmuckatelli is a must follow. That's obviously not his real name. But he was in these rooms 2-3 weeks ago saying shit's going to get real, stuff's going to happen. And it did. And so unlike everybody else, hold on, Schmuckatelli, got to get you back up here. There you go. Unlike everybody else on here doesn't know what they're talking about. He actually knows what he's talking about. Him and L'Enfant, I hope he comes back alone. Both military guys, they had it nailed. So, where are you, Schmuckatelli? Where'd you go? You here? You keep disappearing. Hey, O'Hare, did he disappear again? I can't see him. I think it's getting jiggy on us again. Hold on a minute. Oh, wait, hold on. I don't know if it's him on the speaker. I don't know if it's the app or he's hitting the wrong button. Right now he's coming back up. So, Joe, are you there? You there,
Hey,
Schmuck?
George, can you hear me?
Yeah, you're perfect. Hey, good to hear from you as always.
Likewise.
You called it, dude. You called it. And so, kind of like, what do you think? What do you think?
Well, on that note, I think the best way to kind of try to figure out what Putin is up to is don't look at his words, look at his actions. And, when I saw 170,000 Russian troops surrounding the country of Ukraine at every possible place along the border where Russia could do that, it just spoke loudly to me that he wasn't bluffing, and that was exactly what he wanted to do, was to invade the country. And now what we have is this back and forth, and there's talks. I guess they're on their third round of peace talks. But this is just more of Putin just stalling, delaying, posturing, pretending that he'll talk to people. But I think really at the end of the day, he's made it quite clear that he'd rather Ukraine be a pile of rubble than an independent country that is not under his sphere of influence. And he will not stop until that happens. There's increasing bombardments of major cities like Kyiv and Kharkiv, and the Russian onslaught will continue. There's Ukrainian rage, of course. If anything, he's given the Ukrainians a sense of nationalism and solidarity that they probably, haven't had, at least in our lifetime. And so, whether in the long run this is a strategic blunder by Putin, I guess that's left to be determined. But he is taking losses. I mean, take it with a grain of salt, and this is unconfirmed, but Ukraine is claiming that there's over 10,000 Russian service members that have been killed since February 24th. They're also claiming to have downed at least 9 Russian military aircraft in the last 2 days, including 2 Su-34 bombers. Refugee flows continue. We're looking at 1.7 million refugees have already flown out of Ukraine, have already fled from Ukraine. Here's what's really distressing is that, a lot of these talks are for safe corridors, and Russia is just routinely violating. They'll agree that there will be a safe corridor, and then civilians will try to leave these cities, and then they'll get bombed. And the UN's estimating that up to 400 Ukrainian civilians have already died while trying to exit cities in previously considered safe corridors for refugee flow. So, that's kind of what's happening. My thought is Russia's going to continue to throw its troops into the meat grinder, and pulverize Ukrainian cities with missiles and artillery. I don't think Putin's going to quit, because the only exit for him is to be able to claim victory in Ukraine. So, all that said, if this becomes an occupation, it's going to make Afghanistan look like a walk in the park. Many students of history will remember that Russia lost over 13,000 troops in its occupation of Afghanistan over the years. And we're already possibly close to that now. And if Russia does attempt to occupy Ukraine, it's just going to be a continual slog of dead Russian service members for as long as they try to occupy that country.
Right.
I mean, that's my thought.
So, Joe, you said 13,000 Russian troops are dead, or Ukrainian troops are dead? I'm sorry. What did you say?
Yeah. So 13,000 Russian troops died in Afghanistan.
Okay.
The Ukrainians are claiming that they may have already killed up to 10,000. I think that's a bit high, and that's not confirmed.
Right. All right. Yeah. So, Joe, let me ask you a couple questions for you. And so, one, I've read enough and heard from enough smart people that we should. I don't believe anything anybody's telling us. I don't believe the American press. I don't believe the Russian press. I don't believe the Ukrainian press. So, from where you sit, for those of us trying to keep track of this, like, who do you think is most likely telling the truth at this point, or it's all garbage and you just have your own sources?
George, I've been transfixed. I mean, it's a new world. It is, mostly I've been getting firsthand accounts on Twitter, but I hear about TikTok. I'm not on TikTok a lot. Telegram. Word is getting out. The Ukrainians still have internet because, our friend Elon Musk is giving them Starlink and all this other stuff. I'm not saying it's a steady signal, but word is getting out. And I trust the Ukrainians that are talking firsthand live, whether it's literally in a Twitter space or elsewhere on social media, or videos that are corroborated and confirmed. So I find the best source of information is the Ukrainians themselves. And, the videos and the photographs and the eyewitness testimony live from a Ukrainian in Kyiv is the most compelling information I've ever been witness to. And that's really been the backbone of what I've been mostly getting my information from.
Hey, Joe, is it me, or do some of these videos that are being put out there online, they almost look identically produced as the ISIS videos we had prior to Trump coming in?
Don't get me wrong, Aces.
Don't they look
get me wrong,
kind of produced by the
of,
same company or something like that?
No, there's a lot. I know where you're going with that. I'm picking up what you're putting down, and I'm not telling people to blindly follow any video or photograph they see. There needs to be some kind of corroboration. There needs to be some type of real-time way to be able to see that video is actually that city, that location, that person talking. Okay, there is a lot of bad video out there, a lot of bad imagery, a lot of bad reporting. And I encourage people to try to corroborate sources and try to, confirm things when they hear them. But I would say, of all the things that I've talked about, what's most compelling is when you hear, these Ukrainian fighters talking from, within Kharkiv, within Kyiv, within, the actual cities, and saying what's going on. I heard one today saying, hey, we got food. I can't pick what I'm going to eat. It's not the best food I've ever had, but, my belly is full. I've got enough food. I'll get through the day. I'll be fine. Just get us ammunition, get us more stuff, and, there's other, perhaps not as important to know. Well, I mean, it is important, I've heard these tragic stories of abandoned pets, and, they're in these, pet orphanages, and they're starving, and people are trying to get pet food to them. James McKay is a great guy, and he's in a lot of these spaces, and he's actually organizing a charity because he's got a personal friend in Kyiv right now. And so there are a lot of humanitarian efforts going along those lines.
Yeah, but interestingly, Joe, because my decade in Africa and Ebola and all that stuff, typically you have the UN come in right away, Medicine Sans Frontiers right away, all of the medical folks and everything else. Not one word out of any of those organizations.
It's not safe, it's just not safe. It's been really difficult to get people, to get people in. It's
so Joe, let me ask you a question. So set me straight on. So one of the things I've been reading, you talked about this could be you make Afghanistan look like a white walk in the park for the Russians if they got to hang out there for a long while. Schmuck, I was talking to say, hey, look at the lack of support they have, feeding people, housing people, blah 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 blah. I mean, you look at the way the Russian troops are being supported. I mean, can they sustain this? This guy was making the point to me. This is like a freaking joke. What's your take? What's your take, Schmuck?
It's a great question, and I'm tracking with you, George, and I agree. There's that famous saying from a Marine Corps general that strategy and tactics are for amateurs and logistics are for professionals. The way you win a big war like this is with logistical expertise, and the Russians have shown singular mediocrity. I mean, it is horrible. This vaunted 40-mile convoy outside of Kyiv, I mean, it's broken down of its own volition. I mean, they don't have fuel. They don't have, they don't have food for the troop. They don't have spare parts. So in a weird kind of way, I mean, it was its own. It seems to be its own casualty, without a lot of shots being fired on it, because the Russians don't have the supply lines to actually keep that thing moving. So it's a good point. It's a valid point, and I agree with the point that just the logistical. I mean, imagine a small city. Many of us have, I mean, I live near a small city of 180,000. Could you imagine feeding, equipping, and tending to just compliant people every day, all day? What kind of an immense supply challenge that would be. Now do that with an army that's consuming fuel, that's consuming ammunition, that's breaking down. I mean, these are old, some of the equipment is Soviet era equipment. This stuff breaks down. You don't have small parts, you're not moving. So it's a valid point, and I think we're going to see that more and more as time goes forward. Every day that Putin doesn't take Ukraine is another bad day for Putin. I mean, to backtrack, if he'd have done this in 48 to 72 hours, if he'd have done that blitzkrieg that he maybe thought that he was going to do, I think the world would have been knocked back on its heels, not knowing what to do, and we would have tried to just go forward and put together some semblance of sanctions to show our outrage. That didn't happen. And with every day that passes, we see more and more horrible videos of 11-story apartment buildings reduced to rubble, of civilians being trapped, of horrible, sad stories. And, it's only going to get worse from here, in my opinion. That said, he's an autocrat. He has firm control. He has total control of the media, and the Russians are largely behind him. As hard as that may be for Western people to believe, I think he still has the majority of the Russian people behind him in this war effort.
So Joe, let me ask you this: if you were sort of chief commander or whatever, he's from a game theory perspective, always trying to figure out what's in the other guy's head, which is, a thankless task. But the guy's smart. He may be evil, but he's smart. What's the off ramp? Like, you got to give him a win, so to speak. And so whether or not it's, people say, oh, just give him, Ukraine's not going to join NATO, or you give him the Donbass and blah, blah, blah. Like, what would you, because you got to give him something. So if you were, I think you're preferable to, even though I don't know you that well, I'll take you over Jen Psaki and Kamala Harris any day of the week, okay? And Anthony fucking Blinken brain dead asshole, okay? Like, what would you be if you were running the show? What would you do, Joe? How would you play this?
Yeah. Okay. Here's the problem: is that Putin is putting forth really, really unreasonable, demands, and so it's going to make a negotiation exceedingly difficult. Exceedingly difficult. I heard the other day something that I thought, and maybe this would have been a good solution prior to the advent of hostilities. But Ukraine is basically Finland. It's not NATO. It's not Russia. It's an independent country. It's Finland. Okay. It's got a non-aggression pact. I don't know. You can design that, trust but verify, figure out your ways for Russia to be happy with that. I don't think that'll be enough for Putin. At the very least, he's going to want Crimea and the eastern provinces right now. That's for sure. And it looks like he wants a hell of a lot more than that. And that's where it becomes unreasonable. He's also, go ahead.
Sorry, Joe. No, sorry. I apologize for interrupting you. Please go ahead.
Yeah, so like I like, Ukraine is Finland. I mean, I just want the people of Ukraine to be able to live with their own self-determination and to have their own country. Now, of course, over the years, Putin will do everything he can to disrupt that and put up his, use his disinformation, misinformation, and try to install a puppet leader that will one day get closer to Russia the way Belarus has done with Lukashenko. Okay.
Now, Joe, I'm just curious, what on earth, okay, is this guy thinking, right? I mean, as far as I can tell, Ukraine, it has the GDP of 1/3 of Walmart's revenue. And in about 7 to 10 days' time, he's turned Russia into North Korea, right?
I've heard you
I
say
can't,
that, and I
right?
think it's a
I
good
can't
point.
figure out what in the hell is he thinking here. Can you tell? Do you
Well,
have an
I
edge on that
think
or what?
okay, first of all, I don't dare to get inside of Putin's brain, but you got to remember he's surrounded by sycophants. Anybody that doesn't tell him what they believe he exactly wants to hear is either fired or killed. Right? We've all had autocratic bosses, and they're nothing compared to this guy. And so he doesn't have people around him that speak truth to power. So going into this, I firmly believe he thought it was going to be a walkover. He thought they were going to literally, I've heard stories that they thought that the Ukrainians were going to be throwing roses at the liberating troops of the Russian troops as they walked down the boulevards of Kyiv. Of course, that didn't happen. And so they told him what he wanted to hear, and he had an unreasonable level of confidence that this thing was going to fold in no time, and that didn't happen. Now, does that mean I count him out or anything? I think he miscalculated. Okay, but he is not going to relent. And basically, he probably considers this a fight for his very survival. I mean, if he doesn't, yeah, go ahead.
Yeah, Joe, I think you're 100% right. I mean, he's boxed himself in now because he's gotten so
Right.
deep into this that if he pulls out and goes back into his constituents at the Kremlin, what's he going to say? He's going to look weak. Putin is one thing is for sure.
Exactly.
He's not going to want to look weak. So you're right. He's boxed himself in. And we got a lot of hands up, George. We got a lot of guys in line.
I know. I just want Joe to finish off on this, and none of the questions. I don't want to. I mean, if you want to ask Joe a question, what he thinks, that's fine. But I don't want to have any, hi, George, I'm a first-time caller, and this is what I think Putin should do. No, we're not having that. We're not having that. No fucking geopolitical experts in the room. There's only one, and that's Schmuckatelli. If you want to ask the man a question, that's fine. But no sort of peacocking because you got it all figured out, after your triumph in conquering COVID and all the other shit. So Schmuckatelli, I just want to ask the question again. So what do you think? So what? We just got to give him the fucking Ukraine. What does he want? What would be enough to make him stop all this? That's the question I want to ask you.
He needs to claim victory to the Russian people, and that probably means occupation of a large part of Ukraine. Can we carve out a rump state that's not part of that? Perhaps. He appears intent on, if not threatening Kyiv, taking down the whole city, even if that means turning it into Moonscape. So he needs a large measure. He needs to be able to proudly and defiantly go to the Russian people and say, look what I've done. And so what does that look like? It's a difficult question, George. I think it's occupation of a large part of Ukraine, if not the entire portion of it, in the entire country, I should say. And that's really where the hard part of the diplomacy comes through. That's really where the rubber hits the road, is how do we find a way for the Ukrainian people to maintain some level of autonomy and independence and give Putin a win so he can, cease hostilities and people will stop dying. And, I'm sorry, George, I can't pretend to know the answer to that. I can't.
And then the last thing, and then we're going to move on. What you're describing, let's talk about time. Just like we talk time and market. What you're describing, this is not like, doesn't sound like, we're going to come running in on Wednesday or Thursday this week. And peace in our time, it's all fixed. No. What you're describing, it sounds like the sides are so far apart that this could take quite a while. I mean, what's your sense of time?
Yeah, look, if they could come to some kind of, if they could cease hostilities within a couple of weeks, 2-3 weeks, I mean, that would be a good thing. And a lot of people are going to die, and a lot of cities are going to be reduced to rubble in 2 or 3 weeks. So, I think that's as early as it gets. I think anybody who says this is going to end within 7 to 10 days is overly optimistic.
Thank you, Fat Schmuckatelli. All right, move on. We're going to do Bobby J, Capital. Yeah, Bobby J, and then Capitalism. Bobby J, welcome. What's up?
Hey, yeah, I have a question for Tony. Is he still here? Yep.
Go for it. He's there. Yep.
I'm here.
Okay. Hey, Tony. Europe. Someone asked me today, how come European bank stocks weren't down that much today? And my answer is because they've been going down for 20 years. And if I could short one thing right now, it's the Bernie Ebbers, the Kenneth Lay of central bankers, Mario Draghi.
Yeah.
And what I mean by that is I took another dive recently into the Italian banks, and they reduced their non-performers, but it's not because those loans paid back. It's not because those companies that borrowed or small businesses are back on their feet. They papered over all of this stuff. They securitized it, and they moved it around. And what I'm thinking, because going back to the sandpaper, and is this going to be a 10-year thing? I do think that Europe is worse than Japan. I do think it's kind of a sushi marinara. And when I look at these banks, they're all, they're lucky to post 3% ROE. Their clients are still not back on their feet. And then the ties that Italy has with Belt and Road and to Russia, with 17% of its economy off the books. What is the best way to short Europe? I mean, the banks are they're down, but I really think that this is something that's going to drag on the global economy for quite some time. I got a call from Ireland today, and they said they're expecting us to take in 100,000 to 200,000 Ukrainians, and we have a housing shortage, and we have a rising homeless situation. So we basically, George asked the question, who do we believe? Well, I believe the people that are leaving the Ukraine. So now we have another country that is kind of floating around. It could end up being 3 or 4 million people, and that's half the size of Greece and about the size of Ireland. The prospects for Europe longer term are looking really, really grim. How would you play that?
All right, Bob. I fully respect you targeting the banks in Europe. It's traditionally been the right weak link to attack. Now the reason I can comment on this, but I got to state it's not my trade, right? It's your trade, so I can only offer what I see. And the thing, put it this way, I can only offer perspective. Like you were right at the very beginning to point out, like when you got questions, okay, hey, why weren't they down? So why weren't European banks down so much today? The answer is because they're down 40% coming into today, right? Today very much had the feel of that capitulative action, both in commodity buying and maybe even in some other in good industrial metals or natural resources buying. So if there's capitulative action there, potentially this is probably buy the fact back kind of action in European banks today, where they didn't fall very far, but it's because they've already fallen so far. My point is, that sector, they've just fallen from 100 to price of a 120 to 75. The lockdown lows, the dead ball low was around 50. So now, you're talking about hunting that $25 move at the very least, which is fair. Since we fell halfway to that in 5 sessions, it becomes really difficult to get into the trade.
No,
right?
I agree. I agree. Yeah.
Yeah, and the other thing, the other thing that I think you're going to, put it this way. So my advice is, yeah, you're going to see these moving averages on the upside on some kind of retracement or something close to them. So you have to wait for that. But the bottom line is, as on the downside, you're going to start fighting central banks. You know what I mean? And that's the only reason that, while I think this trade has perfect merit, you're going to get to a place where you're going to have Mario Draghi and all of his men shooting against you. And so that's where it's like, okay, well, I don't think this trade is over, but I have no choice. I have to cover because the talking heads are coming after me. That's all I can really offer you. And I don't want to take you out of what could be a
No, no, no. I'm pretty much reduced my position in that. I'm just saying that I think Europe is going to give us multiple chances on the short side over the next 5 years.
I agree. I think they're going over the barrel with ESG.
Yep. All right. So
Right.
Over the
Okay.
waterfall. So I
sorry,
think
so we're
Okay,
not going to have any
George.
Twitter. We're not going to have any Twitter space rooms on European banks and buying opportunities. So thanks.
George, can I just ask a question, not about the European
Yeah,
banks, but just
three
in
aces,
general?
please.
Thanks.
Three aces, please keep it tight because we got a huge
Yeah,
stage,
quick question.
George, I got to
and
hop
we got
off
eight
there. I got
people
to hop
waiting.
off there.
So go
This is
ahead.
George.
Sorry,
All
go
right.
ahead,
Hey,
three aces.
Tony, we'll catch you next time. Nice speaking to you again, brother. Hey,
All right.
Bobby J, I'm just curious. Absent the debt jubilee, how the hell do these central banks square their books at some point?
Oh, great question.
Oh, yeah. I don't know, and especially the ECB because they have gotten into, corporate bonds, asset backs, and I just think they're creating a tinderbox. I think the central banks in Europe can go at it another time, but I think uh, the more they do this, the worse it's going to be.
I'll just throw my 2 sentences in eighth races, not because I got a smart opinion, but my best French contact, I was talking with him today, and I guess we get ECB stuff on Thursday, and it's less about rates and more about Mario Draghi, please call your office. I'll do whatever he takes. So he's saying they're going to make noises about more money for everybody. I mean, his view is we're going to get the bankers are going to wind up turning on a dime as this problem intensifies, and they're going to start printing money again. And the Davos crowd, the V's, whenever they don't like losing money, and so whenever that happens, they rev up the printing presses again. And his view is like the world won't come to an end, and we're just going to get much higher inflation out of this whole thing because the banks aren't going to be allowed to do a face plant. So I don't know. So because there are problems, the more Bobby J talks about how screwed up it continues to be, the more likely my French friend is going to be right. And so then it just plays into what Tony Greer is saying on the charts in terms of the resources going crazy. So I don't know if I had to bet right now. That's probably the way I would bet. All right, let's move on. So we're gonna do capitalism, and then Abe, and then Trend Wizzo. Hey, capitalism, what's up?
Hey, thanks, George. I'm not going to spend too much time here, but I wanted to point the group to this paper that was written in 2012 by Chris Cole and Artemis. It's called "Volatility at World's End," and he points at Weimar Germany, but he makes an interesting point that suggests he went back and measured the VIX in that environment, and he points out that the nominal gain in the German stock market was like 2,500%, and consequently, volatility spiked to 2,000%. And I kind of want to draw an analogy to that, given what's going on in commodities markets. It 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 seems like you could basically make the case that volatility is underpriced in a world of rising commodities prices. So I guess the point I want to make, I see that Doomberg's in the chat here, and he might be worth bringing up here, and I'm happy to drop my spot here. But in a world of basically 50 years straight of globalization, where you've basically extended supply chains, made them more complex, extended them across time, and with more counterparties, we're basically now seeing over the last 2 years through the COVID pandemic with PPE shortages and now with sanctions, unbanking of Canadians, what have you, you're basically going globalization in reverse. And I wonder if people have thoughts on the impacts of that for equity markets, investor psychology, etc.
Wow, what a great question, capitalism. You get the prize for question of the day. So much to unpack there. I agree on the volatility thing. I also agree. I think I mentioned earlier. I think we're in for. I don't care about the cyclical stuff, about the long term, the blah blah blah. Disinflation technology, all that globalization crap. I think cyclically, we're looking at a higher inflationary environment for a whole number of reasons. Deglobalization. In the U.S., we've actually run out of skilled labor. Inadequate investment in extractive resources, energy, and other metals. ESG. I'm leaving out some stuff, but I think even if you buy into the long term disinflationary blah 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 because of demographics and technology, and you don't need me to do that spiel. Just turn on CNBC. I think there's good reason to think. I believe, and I could be wrong, that we're looking at higher inflation. And I'm not going straight to Weimar. We'll drive off that bridge when we come to it, as Teddy Kennedy famously once said. But right here, right now, inflation is going up, not down. And I think anyone who's watching CNBC needs to hit the mute button and go back to Mark Newman's spiel earlier about the continuity of bullish thought. This is a regime change. And we're going to have Abe talk in a minute because he deals in metals and all that other stuff. So I could not agree more with what you're saying. And as we get this discontinuity of bullish thought, there will be dislocations. Many people just don't realize what's going on, and there will be volatility. So I agree with you. So I think it's a great question, and it's such a good question. Honestly, that's the best question I've heard in weeks in any of these spaces. I can't thank you enough for that. Unfortunately, given how many people are in this room and want to ask questions, if you don't mind, I'd like you to come back and ask that question again in another room. As a matter of fact, that could be a topic for an entire room. So thank you for that, Crapples. I really appreciate it. Abe, maybe you could start off. Give us the update on what's going on with the steel, and I don't know. You got a perspective. Three of us was talking about there was a whole thing today. The nickel price going crazy. So you've been great on your calls, your observations the last few days, dropping a lot of truth bombs in here. So give us the update. What are you seeing, man?
Okay, thanks, George. Appreciate it. So as of this morning, my contacts in Eastern Europe, from the Ukraine to Moldova, Romania, Bulgaria, Poland, Russia, essentially Belarus. So essentially what's happening, because I've heard a gentleman talk prior that need to be careful with the whole materials side of the equation, the commodities. Well, I can tell you based on firsthand information on, because I get the stuff straight from the mills, because I move a lot of physical, as you know, just for others who don't know, I move as my kid would say, a shit ton of steel into various markets around the world. Belarus is offline as of today. Ukraine is completely offline. Basically, Europe right now is scrambling to get anything they can get their hands on. I've had to reprice 3/4 of all my order flow as of this morning. We've rejected everything and gone back. The prices of, in particular, rod, so just wire rod, has moved up about 27% in the span of a week. There's no supply. And so anyone who's thinking that, prices are going to drop, at some point, or at least imminently, I think you really need to reconsider this. I've been in this game 28 years now, 28 years. I've never seen anything like this. And we don't have any supplies. So I don't know where the hell you guys are going to get it from, or anyone's going to get it, because the physical just doesn't exist. Ukraine is a massive supplier of iron ore, steel. They export to China. They're offline, and so is Belarus. So good luck to the crew that think that they're going to be able to get it from somewhere.
So, hey, basically what you're talking about is we're looking at a huge supply shock here, right?
What's that?
Basically what you're saying is we're looking at a huge supply shock.
Yep, 100%. And I'm repricing shit every day now. So, you got to understand, I'm seeing this from the mills, not from, I'm not trading GLD and the paper and the bullshit. I'm moving the physical. Okay, so I'm just telling you that I can't get it, can't find it. And so iron ore is being starved and steel is being starved. And hence, that's where you see the pricing. The pricing has moved, and the existing mills that do have are basically quoting week to week, and pretty soon it'll be every 3-4 days. That's how it's going. So
Wow.
And these are finished goods or mid-cycle raw materials?
they're both.
And where do the natural resources come from? In country, or are they bringing that in?
No, the natural resources primarily come from the Ukraine.
So
That's
it's
what I'm
all
telling
in
you.
country. So in natural resource, upgrading the natural resource to finished materials and then finished goods for product, all vertically integrated in Ukraine. Is that what you're
Uh,
saying?
the raw materials, the primary raw material,
Uh
because
huh.
without that, you can't do anything, is Ukraine
Right.
and Belarus.
Uh
Then
huh.
it moves into Eastern Europe, not cheaper, but more
The
advanced jurisdictions.
Croatias and stuff
Yeah,
for
yeah,
processing,
yeah,
right? And then
exactly.
the finished materials are also in those eastern countries, or are they then shipping it out
No,
again?
they're finished and they all end up in the US.
Got
So
it.
I
Thank
got
you for
new,
that. Yeah.
yeah.
All
So
right.
you're looking at major inflation. Look, I can
Yeah.
tell you some of the stuff, confidentially, ends up at Home Depot. I'll leave it at that. So
Yeah. All right. Yeah. All right.
prices are moving.
Thanks, Abe. Stay on stage. I'm sure you have a lot of questions.
Yeah.
All right. I want to go to Trend Wizzo and then Shabam. Trend Wizzo, how you doing, man?
Hey George, thank you for giving opportunity. A couple of quick questions. So first one is for yourself. From an end game perspective for the markets, you are a veteran. You have seen a bunch of these conflicts in the past. I started trading only in '98, and I've seen downturn and I've done bear market trading, but I've not seen a conflict such as this one emerge. So would like to get benefit of your experience. Second question is uh, to Bob from a standpoint of the insurers. They may or may not have securitized their insurance coverage, or they may have reinsured, they may not have reinsured. But what is your view on the insurers, given what you mentioned about the banks? And then I have a third follow-up for the gentleman who was describing about the production. So, George, thank you. But this is great. I've shared a bunch of related tweets up top of the room related to some of the topics which were discussed, such as the bank one, like ING having some, impairment of assets, etc. For folks
No,
who are
Trend Wizzo, I appreciate a lot of good questions. We may not get to all those. We're going to go very quickly because this room, I don't want this to go all night, and it's too many good questions. So, first question: I've not been through a conflict like this either, but there's kind of a muscle memory or pattern recognition in terms of market behavior. And I don't know if you're in the room earlier, but I put up, I think I tweeted out. If you want to grab it, you can put it in the nest. The history of the bear markets, how long they tend to last, and listen, if it's only as like a few weeks ago, people are still piling. Equities took in more money last year. Everyone knows this, but I want to remind everyone. Everyone took in more money last year. Equities took in more money last year than the prior 19 years combined. Recently, you had December into February. I think it was 150 billion of money of more inflows. Insider buying, despite the market declines, been really muted. So you've had retail's been buying the dip. Like, I don't think I have to explain what that means. So,
right.
I think it's a disaster. I think people haven't gotten the memo yet. I mean, listen, the reason we were all bearish before had nothing to do with Ukraine. We didn't know about the Ukraine. It all had to do with liquidity and Michael Howell, and the economy's going to slow down, and profit margins are going to roll over, and inflation's too high, and it's not transitory, and blah, 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 blah. Okay? Now we have this horrible conflict, which hopefully from the attachment, it'll go away sooner rather than later. But listening to Schmuck talk, I'm not holding my breath. And this is really the accelerant. This is just exacerbating the problems that we had before in terms of rising resource prices and the supply side shocks and so on and so forth. And now, on top of it, you layer on, as Bobby J was talking about, we get the specter of looming credit problems, particularly coming out of Europe, and liquidity problems. So there's no other way to count it. I think it's a freaking disaster. All right, let's go to the second question. Bobby J, real quick. Any thoughts on European insurers? Bobby J.
Yeah, I'm here. It's going to take. It's the insurers have been trading down, but it's going to take. Bear in mind, it took 5 years for non-performing loans to peak after the great financial crisis in Europe, and we're this is going to be the same here. Europe has just been kneecapped, and this is they were not ready. They were not capable of handling this, so it's going to take a good 5 years to sort this out.
Thanks, Bobby. And then quickly, trying to was a last question, and you're not going to be allowed to follow up because you managed very, very cleverly to sneak three questions in at the outset. What was the third question, the one that we didn't answer?
Sure, thank you. So the third question is related to the disruption that for production purposes that was mentioned, extrapolating that to high-tech production. Do you also foresee a high-tech getting similar,
All right, I'm going to cut that one off. I joked earlier in the room about neon. Just go look up, just Google neon and seeking
Sure,
out.
will do.
You know, and they're apparently responsible like 50% of global. Ukraine's responsible for 50% of global neon production, and 90% of the neon that goes to some high-end semiconductor manufacturing process in the United States. So, not that we all got to become neon experts, but that's just think a good example of another product which is not front and center. And Shabam's going to go next, but I think there's a lot of that stuff that's going to go down. And Abe talked about it yesterday. I don't want to get into it again today because, again, we're running on borrowed time. But I suspect you're going to see a lot of other situations like that where you're just going to be screw-ups in supply chains and a missing widget piece so, Toyota can't make the car or whatever. So thanks for the question. You always ask great questions. All right, we're going to go to Shabam, and then we're going to do L'Enfant. Shabam, what's up?
Hey, George. Thanks again for having me. Is the audio all okay? Yep.
You're good. Keep going. Go on.
Okay, perfect. So I just want to make a quick comment on the oil markets. I mean, you just hit the nail on the head there. There's going to be a lot of messing around here with supply chains and whatnot, and oil is kind of the front and center of it. And I just want to make one comment as to what we're seeing here. So Alberta, the big oil production province in Canada, just announced that they're going to completely remove the gasoline tax, and they're giving people subsidies for the price of natural gas to heat their homes. So I think this is the only way out of this oil supply demand problem we're in. We have to have higher oil prices for the next few years, which is going to bring upon more supply, lower demand a little bit, and increase the technological innovations. And the only way we keep oil prices high and the consumers happy is with removing taxes and with subsidies on incentivizing demand. And it's going to be up to governments here to find the fine balance where they don't create this huge monster demand scenario either, but they kind of keep people happy where people aren't losing their shirt, they can't go to work, they can't pay for heating their homes, etc. So it's an interesting time we're coming on where governments are really pressed against the wall here to reduce the taxes on gasoline and carbon and whatnot, and the whole ESG thing can just go crumbling down here. And we'll see who kind of keeps wanting to push that mantra and who backs down, given that there's a lot of government elections coming up here soon, and you don't want a populace that's hungry and cold and are willing to kick you out of power for that. So just my 2 cents, and thanks for having me again.
Shabam, always you're so knowledgeable. Question for you, follow up, if I may. I've been reading the last few days. Someone's talking about Canadian. By the way, Sohaib's not here, and I think Oil God's in the audience, so I got you guys covered. There aren't enough of you guys. By the way, if you don't know, Shabam is like one of the most knowledgeable experts on energy and Canadian oil stocks in particular. He's a must follow. He's also got his own website. He's incredibly generous. He gives away his work for nothing. If you want to do deep dives and knowing which oil stocks to own, he does webinars, Zooms, whatever. I mean, it's like ridiculous. I mean, he's better than, I'm going to say Shabam, and I don't embarrass you. Someday we're going to meet. I mean, he's better than any, with only a couple of exceptions. He's better than any big time, name brand oil analyst in the street. Right? He really is incredible. And what I like is he uses the KISS method, keep it simple, stupid. So even idiots like me can understand it. So Shabam, I want to ask you a question. So I was talking to some guy yesterday about Canadian energy stocks, and we all know the reasons. I've learned from you. They're more attractive because they're cheaper, they're faster growing. They got better reserves life, they got lower depletion rates. the piping is improving, so the differentials go away. How am I doing, Shabam? I think I'm channeling my inner Shabam pretty well. In any event, so this wise guy throws back to me. He goes, yeah, but the reason they sell at discounts to the U.S. guys is because this carbon tax thing, and I was reading up about it. Like, I know you got this carbon tax. I always get confused with the liters and the gallons, but I was reading it up. You got this carbon tax. It's going to go up like 2030, from something to something. But then when I read about it, I think it's only like, I don't know, 2% or 3% of the price you pay at the pump, and maybe it'll be 20%, 8 years from now, whatever. It just didn't seem very relevant to me in looking at Canadian energy names. And so, leaving aside whether or not we get a rollback of this stuff, apropos you were just saying a second ago in the context of Alberta, is these carbon taxes that have been, they passed the law, there's supposed to be a scheduled increase over a number of years. Is this at all relevant or not in looking at Canadian energy companies?
Yeah. First of all, thank you so much. You're way too kind, and I appreciate the shout out. So as far as the carbon tax goes, I don't really think it matters because the end consumer is paying that. So the companies still make their money. They pass on this cost to the refiners and the pipelines and whatnot, and then the refiners pass it on right to the end consumer. So the companies are still making a ton of cash. Now, some of the companies will get hit, the ones that are emitting a lot of carbon from some of their projects, but it's just not material enough to really matter. On the other end, there are companies that are doing carbon capture schemes. So they inject carbon deep in the ground. They got these machines on their compressors and their infrastructure that collect the carbon from the exhaust pipes, etc. They might actually benefit from this because if the government is charging you $170 a ton to emit carbon by 2030, I believe that's the number. That means if you can save those emissions, the government will almost pay you to not emit that carbon. So it's almost a benefit, and there's certain producers that can really benefit going forward.
I remember I actually met at a virtual conference last December, Whitecap, which I think is a major beneficiary of that. Is that one of the names that works in that scenario?
Yeah, you betcha. Whitecap's probably the biggest one here in Canada, and they're net zero already. They're actually putting more carbon in the ground than they emit. So it's a great one you point out.
That's great. Thanks for that, Shabam. All right, let's move on. Stay on stage, Shabam. I'm sure there'll be some follow-up energy questions. All right, we're going to go to, and I'm sorry if I'm doing this out of order, but it's just so many. This has been unbelievable room, and it's unbelievable because all of you, all the contributions you make. So we're going to do, so we're doing L'Enfant, and then we're going to do Mashunishi. L'Enfant, how you doing, man? Good to see you.
Hey, thanks, George. I just wanted to share a couple quick thoughts following up on Joe's takedown, if that's all right.
Go for it. Yeah, go for it.
So first thing up front, real quick, just anybody who's looking at trying to place trades based on a thesis of how the conflict is going to develop, like I would just strongly encourage against that or hedge this because wars look deterministic in hindsight, but the reality is that it's chaotic and it's like a football game where both sides have a vote and they're both responding to each other. So a lot of people are asking what's Putin's next move. I'm not sure that Putin even knows what his next move is right now, which is to say that like he is reacting to the situation in real time and adapting because they made some really poor miscalculations in the opening of this invasion. Right now, they are actively regrouping, so I think we're going to see the next phase of this conflict start taking off. I think the two things to really look for is one, Kyiv is definitely the key terrain of the conflict. That's going to continue to be one of the big focuses of the Russian military. And that convoy, 40 miles long, that hasn't been really brought to bear yet on Kyiv. Like that's going to be the big thing to watch is how that goes. Kyiv has had a number of days now to be preparing defenses. It looks like they have been actively preparing defenses, and so this could be a really bloody conflict for the Russians as they move in. But at the same time, the core Russian military doctrine is heavily focused on fires. So you can see them start really bombarding Kyiv in the lead up to this. So this is the phase where things are probably going to start getting really bad around Kyiv. The other thing is that a lot of people are focusing on the north, rightly so, because that is the key terrain. But Russia's actually been making a lot of progress in the south. The north is definitely where Ukraine has outperformed and caused a lot of havoc on the Russians. But in the south, they've really been consolidating territory, and it looks increasingly like they're going to move for Odessa. If they do, that is going to cut off Ukraine from their main sort of supply route that equipment has been coming through thus far. So that's going to make it a lot more difficult for Ukraine to be able to continue getting outside aid, both from a military and an economic perspective. And it's going to make it a lot more difficult for them to be able to hold their defenses. As far as timing, when the U.S. went into Iraq, there was a really good, well thought out plan of attack for how to get to Baghdad. It was executed really well. It took about a month. The conflict was planned to be over in a few months, and it ended up spiraling into a 10-year occupation, and then a continued military presence even after that. So this really could go a lot of different ways. It's definitely not out of the question that within a couple of weeks this could be resolved with some sort of agreement between the two sides, but it could just as easily be something that just slowly spirals out of control and goes on for years, or due to a miscalculation could expand beyond Ukraine. That's still very much a tail risk, but it's not out of the question.
Hey, Mike, I'm just curious. It's my understanding 25% of Russian nat gas runs through pipelines in Ukraine. If that's an accurate number, why doesn't he just blow those things up, this Zelensky?
Why doesn't Zelensky?
Well, it's my understanding. I read someplace, who knows if that's real, but if it's real, it said that 25% of Russian natural gas pipelines run through Ukraine. Why doesn't Zelensky just take those nat gas pipelines out? That'd be the first thing I'd do.
There's a lot of different reasons that you might want to be avoiding doing something like that. It could be that they want to continue to try to preserve everything related to energy for how the conflict may go in the end. Ukraine, the infrastructure that they focused on blowing up so far has just been the stuff to slow down the Russian advance. So things like bridges to the northwest of Kyiv. I don't know that it really serves them a lot of good to destroy their own infrastructure from an economic perspective, even if that would be something that hurts Putin. Like, I don't think that they believe that they'd be able to, by cutting him off from that, have much of an impact on Putin's ability to wage the war beyond what the West is already doing from the sanctions. So I think they're going to be focusing all their combat power on continuing to disrupt the Russian advance and drag that out. Because, as Joe mentioned, every day that the conflict continues, every day that the Russians don't take Kyiv is a loss for Russia and a gain for Ukraine.
And I'm just curious, if I'm a Russian oligarch and they're freezing my boats and yachts and assets and everything else, there's a lot of these guys, and between them and the Romanians and the Ukrainians, these boys are vicious military guys. I mean, these guys, if you ever met any of those guys, they are ruthless, man. And, I'm thinking here, why in the hell doesn't one of these guys have them taken out? I mean, is there a likelihood of some kind there would be a coup d'etat there?
Well, my understanding of the power brokers in Russia beyond Putin, that there's kind of two groups. There's the oligarchs that Putin has enriched, and then there's sort of like the strongmen, which are the guys in senior positions within the military, the intelligence services, etc. The strongmen are definitely ruthless bastards, but they tend to be aligned with Putin, and they don't really give a shit about the economy. If anything, they might think this is a good thing because it brings Russia back to autarky and dependence on themselves. For the oligarchs, I think it's a bit of a misnomer to think about this sort of like a mafia type of situation. Putin really is their protector. He is the source of their. If Putin goes, they could be exposed to all kinds of different corruption charges from all kinds of other people and infighting within themselves. Putin is the one that's enriched them. Putin is the one that has given them everything that they have. They're not really in a position, as I understand it, to be able to really exert a lot of power against Putin. The strongmen, I think, are better placed for that. But as I say, I think they're aligned with Putin and likely really supportive of this.
And the last number I've seen, if it's again legit or not, I don't know. There was about 8 trillion or so ruble corporate debt outstanding. I'm assuming the banks there, the Russian banks, own that. The ruble's now, a penny, right, for a ruble or something. Did they? I mean, from my perspective here, looking from the outside, and notwithstanding some of the exclusions from the sanctions and so on, by all accounts, I mean, this Russia is now North Korea. I'm just curious. I mean, do you have an opinion here as how the banking system would survive that kind of a devaluation in their assets on their balance sheet? And is this
So
North Koreaville?
three aces. Hold on. I, with respect, don't ask me for military advice. I don't really want to ask Lawful for his financial
Yeah,
insights.
I was going to say the same thing.
All right, so I'm going to cut you off on that one with love, my friend. Okay, we want to get Bobby J back in here. That's fine, but it's really not for Lawful.
Hey, George,
yeah.
hold on a sec, guys. We've had a lot, actually, quite a few speakers today talk about Russia being a North Korea, and I just got to say, just because I've heard it so many times now, look, comparing Russia to North Korea is complete. I mean, I think we're losing sight here. I mean, Russia, their biggest trading partners potentially going forward are going to be the two biggest countries with the biggest populations, China and India. So to think that they're like a North Korea is completely, I think, missing the point. I think Russia and Putin, that's the way you got to look at it, I think.
Well, O'Hare, can I just ask a quick question, George, about that? So, I mean,
No.
Go ahead. Go.
He's going to lay down the hammer.
No, this is a rabbit hole, and I know we could talk about this next time. People are taking words, seizing on words out of context.
Yep.
Everyone's talking past each other. When it was out of context, and this is how things get fucked up in social media. With that comment, I can't remember who said it about North Korea. That's about like he don't give a shit. He'll just run over people. It wasn't about they want to go back to the Stone Age. But let's just move on.
Yeah.
So I want to go back to Lawful. So Lawful, most importantly, and we had Schmuck in the room before, and the sense from him was that this ain't going away. This ain't going to resolve anytime soon. So 2 questions. Everything else, I think, is less important. If you were in charge, you were Commander General of the U.S., Armed Forces, the whole deal. What would you do? Like if you're Blinken or Biden or whoever, and given that you got to give Putin something from a game theory standpoint, I know we don't know what's in his head, but your best guess. What do you think we'd have to give him? Whether it's just a promise that Ukraine never becomes part of NATO and/or he gets the Donbass or Crimea, whatever. What do you think it's going to take to make this thing stop? And then 2, time frame. Are we talking days, weeks, months, years? So go ahead. 2 questions.
Yeah, I think the first thing I would say is just to preface that I don't think that there is a likely path from here in terms of timing. I think there really is a ton of uncertainty, and anybody who thinks that they know how this is going to develop, I think doesn't know what they're talking about or thinking about. I think there's an outside chance that this comes to a conclusion in the next few weeks. If it does, it will be because of a negotiation, because Russia basically outruns their logistics and does the calculation and says, I don't want this to drag on for years. Let's go ahead and cut. I think from a negotiating position, Blinken or whomever, part of the difficulty is that, Crimea and the Donbass, to Joe's point, I think are going to be key parts of this for any kind of negotiation coming out of this. I think that's going to be difficult for Ukraine to give up, but may not be impossible if they want to be able to maintain the rest of the country going forward. But part of the difficulty is that before this, part of the reason that Putin did that, moved into Donbass and then annexed Crimea, is that no country can be admitted to NATO as long as they have contested borders. So that was basically his veto chip, was holding those positions. Ukraine wouldn't be able to enter NATO under that kind of condition. If those become officially recognized and the borders are redrawn, then that would leave the rest of Ukraine theoretically to be able to start the process of joining NATO. So I think at a minimum, in addition to that terrain, he is going to require some sort of guarantee that Ukraine remain neutral. I think, and I'm not inside Putin's head, but I think given how costly this war has been, and it did not go the way that he was hoping it would in the opening stages, I think he would accept an outcome like that instead of, taking over, annexing the entirety of Ukraine. I don't actually know that that's the case. And I also don't know that Ukraine would would ever get to a point where they're ready to accept that, giving up both of those regions
Yeah,
and
I
technically
get it.
neutrality.
I get it. Last question. I'm going to move on. What was all that craziness we saw on TV last Thursday night, where it looked like, Thursday night our time, it looked like the Russians were firing on that nuclear reactor and blah blah blah. Like, was that out of context? Or what the hell was going on there, Lawful?
Yeah, that was a firefight. It sounded like a round landed near one of the reactors and started a fire, but didn't actually cause a fire. But yeah, Russians did actually move in and briefly took over the power plant. It was then being run or operated under Russian control, basically at gunpoint, is what I read. And then Ukraine came back and it looks like retook it. I haven't seen the latest status on it, but yeah, that was an actual conflict around the power plant.
This wasn't one of these James Bond Goldfinger things where they were trying to blow up the nuclear plant. That was not the case, correct?
No, I don't think that would serve. That would fuck Russia just as much as anybody else if they were actually to blow it up. Like the radiation would get blown all up, either down over Crimea or up into Russia. If it had been something like that, that was just a fight.
Thank you, Lawful. All right, let's move on. We're gonna do Mashinishi, and then we're gonna do KFED. Mashinishi, what's up?
Hey George, thanks for this awesome spaces. I just wanted to ask a few questions. Moving back to markets, we've like seen a move into defensives with utilities and healthcare leading, but we haven't seen. We've seen a relative strength in long end yields. So how do you make sense of that? And then
hold on. Defensive's easy enough to understand. They got less earnings volatility, better balance sheets, less betas, so they're outperforming. They're still going down in relative. They're still going down, but they're outperforming in relative terms. And what's the question about duration? I didn't quite understand the question. What's the question, please?
Yeah, I just wanted to ask, how do you make sense of the relative strength in long end yields?
Well, you say long end yields, meaning bond prices going up, yields going down?
No. Yields staying strong.
Oh yeah. So actually, it's a good question, and I had tweeted this out like a week ago. And even despite all the end of the world, blah blah blah, yields really didn't go down very much, and I thought that was very interesting. And I think it plays into the inflation narrative. And I think inflation, is not transitory. And I think we have an inflationary spiral on our hands. And in fact, depending on how this thing plays out, this crisis could even exacerbate that. You got yields at 177 right now on the 10-year. I think we peaked out at a little bit over 2. I got to look this back up. But it's kind of interesting. At 205 was the peak. It's kind of interesting, despite the world coming to an end or specter of nuclear disaster, yields are hanging in there. And to me, that's testimony till we get through this. Who knows what's going to happen, as Lafon was saying. Like, I think yields are going a lot higher. I do want to read. This is just, you can't you can't make this shit up heading. Let me just find it. And this is the insanity of Wall Street investing. And I love rereading this thing. This is like one of the most stupid things I've seen, and I can't remember how long. You guys can find this on Zero Hedge today. It's a research piece from this European firm, BC something Research. Give me 30 seconds to read this to you. It says, rising risk of nuclear apocalypse. 3 aces. Abe, I want to know what you think of this. Abe and 3 aces. And O'Hare. Rising risk of a nuclear apocalypse. Vladimir Putin has now committed himself to orchestrating a regime change in Kiev. Anything less would be seen as a defeat for him. Assuming he succeeds, and it is far from obvious that he will, the resulting insurgency will drain Russian resources. Blah, 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 blah. Let me just keep going on here. Here we go. Although there is a huge margin of error around any estimate, subjectively, we would assign an uncomfortably high 10% chance of a civilization-ending global nuclear war over the next 12 months. Even if, here we go, even if World War III is ultimately averted, markets could experience a freak-out moment over the next few weeks, similar to what happened at the outset of the pandemic. Google. Okay, now drum roll. Listen carefully. I have never. This is the most atrocious piece of strategy I've ever seen in my 41 years in this business. Here we go. Drum roll. Wait for it. Despite the risk of nuclear war, it makes sense to stay constructive on stocks over the next 12 months. Abe, I want your take on this. Listen to this. And three aces and O'Hare. If an ICBM is heading your way, the size and composition of your portfolio becomes irrelevant. Thus, from a purely financial perspective, you should largely ignore existential risk, even if you do care about it greatly from a personal perspective. Bottom line, the risk of Armageddon has risen dramatically. However, stay bullish on stocks on a 12-month horizon. Abe, what do you say to that?
Sorry, guys, I just went to get something to eat, so I missed that. George, what are you asking me?
All right, let's go to the next one. Abe, we'll get back to you.
Thanks, guys.
So are we saying the rise of the risk of Armageddon is coming to our stock portfolios, O'Hare? Is that the question?
No. The point was, three aces, that even though the world may go to zero, you should stay constructive on stocks.
Oh yeah, right. Okay. So the part of the problem for me here in this environment is that we've been saying that this is going to be happening for a year. So now that it's happening, I'm already looking at what's next, right? So for me, I mean, I think the major indices, notwithstanding these big bounces and stuff, are at least 25-30%
Totally.
plus
All right.
on the way down.
Yeah.
So until that happens,
Yep.
I don't even, like, this is just kind of hanging out on the beach.
I know.
Yeah,
we're just kind of hanging out here. I know. All right.
Yeah.
All right, let's move on. So we did Mashinisu. So let's do KFAB and then Dave. KFAB and then AG. KFAB, how you doing? Good to see you, my friend. What's up?
Hey, George. I'm here for my daily installment of waterfall/crash update. So,
you're in the right place.
Well, right. So, again, listen to Tommy earlier.
No, KFAB's coming in here with his daily Fibonacci setup, looking for the weekly option.
No, not per Bach and Benoit Mandelbrot, much higher horsepower. But
there you go.
So, we talked about probably a month ago that the setup was here for, a big problem. And I've been saying for 2 weeks now that the way the markets are behaving is emblematic of what happens when the C word happens. And now, late last week, you had Europe start to crash. Friday and today, the emerging markets joined the party. You can just look at exchange traded funds for people in the room. I mean, look at EMLC, which is local currency emerging market ETF. Look at Singapore. Look at Korea. Look at the big ones, VWO and EM. I mean, we're firmly in waterfall decline territory. The U.S. market just joined the party today. And some of the stuff that I look at that suggests, okay, maybe we're close to a tradable low, like some of the lesser liquid preferred stocks that, blow out and start going well below par.
Don't buy.
Yeah.
Don't buy.
The other big thing is that the way volatility markets are trading, it still looks really weird to me, and as if people are not buying tail risk. No one's afraid. Stu hasn't responded, and so I'm not telling people to panic. What I'm saying is have a plan, be prepared, have cash, and get off any leverage, including the people that have made a ton of money and energy in these commodities. Because you've seen things like utility stocks have gone vertical in the last week. So that's the kind of like reverberation of volatility that's spreading. And when that happens, trap doors emerge. So people are all rotating and crowding into places, and that suggests that really fear hasn't come in, or indiscriminate selling, because they're rotating into utilities. They're not selling them.
You're having too much fun, George.
I know. This is dangerous. I'm like, you give your little kid a new toy. I got this thing. I love this thing. KFAB, 100%. So I mean, like we said, we've all been seeing the ball really well, and I don't know. I just think just nothing to see here. Just move along. It's going according to the plan. Follow the plan. Wouldn't you say, KFAB?
Yeah. I mean, it's again, the U.S. The other part of this that I haven't heard anyone talk about is the U.S. has been the recipient of a huge amount of capital flows with this going down in Europe. Money's pouring out of Europe, pouring into the U.S. You're seeing it in Russian capital flows because they're repatriating. So capital's flooding into Russia. So some of that's been bleeding into the dollar, obviously, but also into U.S. assets. But again, if you're panicking, you're not buying stocks. So this is so early where people are saying, "Oh, I need to get out of war-torn Europe. Let me go buy Apple."
No, you're totally right. KFAB, I think we lost. You want to unmute yourself? KFAB?
Yep.
I think we lost you. Or are you done?
Yeah, I was done.
All right, cool. Appreciate it. As always, KFAB, love to hear your thoughts. Absolutely brilliant. Really, really good. All right. Oh, hey, are you going to have to unplug this thing for me? Because I got my new toy here. All right. So now we got Dave. Dave has been Dave is out. I love Dave's tweet. So, Dave, I'm glad you're in the room. What's going on, my friend?
Hey, everybody. I got a question for Shabam, I guess. I'm going to maybe tie it back to Schmuckatelli's take on the Russia-Ukraine situation. I think the gist of that was this is going to last. This conflict is not going to resolve quickly. Therefore, the Russian barrel is going to remain toxic, whether it's officially sanctioned or self-sanctioned. So we've got Biden basically shaking every tree now to try to get barrels out of Venezuela or Iran. We saw some stats. I think, Shabam, you posted around U.S. drilling activity. Rig count's actually down. OPEC drilling is actually trending down over the past 5-10 years as well. So this is a leading question, and I apologize, but just I guess over to you is where are those missing barrels going to come from?
They're not. Shabam, you got an answer?
Yeah, that is the answer. They're not. People are going to pay for it, and that's just the reality of where we're going here.
Yeah. I mean, Dave, you're a smart guy. I mean, Shabam, you help me on this one. I think we're looking at demand destruction. There ain't no more supply right now. It's demand destruction. It's not.
Yeah, but I think the one thing I will say is that we've never had a supply demand deficit. So let's say Russia is down 2 million barrels, 2.5, 3, let's say. The supply demand gap is 3 to 4 to 5 million barrels a day. We've never seen that level of demand destruction. We would have to have the entire global economy come to a complete halt for that sort of demand destruction. When COVID first hit, the entire world shut down and we destructed demand by 20 million barrels a day only. With every single jet down, people staying home and people doing nothing, we were still at 80% of our current world consumption of oil. So just put that into perspective. The demand destruction required here is on a level that we may not reach. So I think it's going to require some of these subsidies and stimulus that I kind of mentioned to get there. And inventories will just keep going down. There's no supply coming online here anytime soon. And that's what makes this commodity trade very interesting because, yeah, go ahead.
I got a follow up, and that's kind of where you're going. I think is how long do you see this trade or this play lasting for? I know we keep hearing early innings. Nuttall, Jeff Curry, others, yourself, many years it sounds like. So is this a long ride north of 100? We're talking years in the making.
All aboard, Shabam.
Yeah, there you go. I think it's going to be a while yet. I mean, the only thing that's going to stop this is more supply coming online. And how do you get more supply? Well, you need sustained pricing for a year or two and people jamming dollars back into the ground to increase production, which don't come online for 2, 3, 4 years. So the world has got used to cheap energy, thanks to American shale and their Ponzi schemes. But yeah, the real cost of oil has just gone way up, and the world is going to have to get used to it. There's no other answer, and people are going to hurt. That's the harsh reality.
Shabam for the win. Thanks for the question, Dave. Let's move on. We're going to do. Let's see, AG and then Robert. AG, what's up?
Hey, thanks, George. Didn't know if anyone had any speculation on if the Fed went full yield curve control, what we see out of markets? Would that suppress volatility, or are they going to come save our ship? Or
Well, before actually, I think it would probably increase No, it would increase
what do you guys
volatility.
think?
It would increase volatility. Hold on, AG, I'm going to answer your question, or whoever was asking the question. So, no, for them to do a yield curve control, like, I think it may eventually happen. I mean, my guess is shit's going to hit the fan. This is going to get worse. Despite everything they're saying, they may go to a one and done or 2 rate increases or whatever. Who the hell knows? They're going to get further behind the curve. It's going to be more stimulative. Rates will start to drift up. But, come on. 10 years at 177 right now. Starts going up enough. I have to engage in yield curve control, which basically means that the punch bowl is not being taken away from the economy as inflationary pressures intensify. I've tweeted this out a million times. The Fed is so far behind the curve, it can't even see the curve. Google Stephen Roach, R-O-A-C-H, Stephen Roach, former vice chairman of Morgan Stanley Asia, Yale professor, personal friend, started his career in the 60s at the Arthur Burns Fed. This is like ridiculous what they're doing. The Fed is always political, but now it's completely out of control. They have no plan. It's kind of like Putin. They're making it up. They don't know what the fuck they're doing. And yeah, again, and I made this point with O'Hare yesterday. It's sort of like the careening down an ice-covered mountain road, going from one side of the road to the next, and they don't know what the hell they're doing. So yeah, they may eventually get to yield curve control, but that's just gonna that's like Shabam was talking about, subsidizing consumers for energy purchases. If they start they try to suppress yields. I mean, what you need to be doing is taking the punch bowl away, not spiking it more. And yield curve control would just be another form of spiking the punch bowl. So I think it's complete lunacy. So thanks for the question, AG. Robert, you got a question?
Hello, George. I'm a first-time caller. I am a contrarian. I got AMC and the GameStop because they're really down right now. So I'm taking contrarian bet. Am I diversified enough, or should I buy RSX too? Okay. Joking aside, thanks for having me again. Quick comment on yields. It's actually exactly like you said. It's the break-even component that's been rising and the real yield that's been falling. So it's exactly that inflation story that we're seeing in the long end of the yield curve. But I had a question regarding currencies. There's been a lot of huge movements recently, and I haven't really heard much people talking about that, but the euro is absolutely getting demolished. It's the main reason the dollar is up, actually. I think it's worth checking out some
100%,
dollar.
100%. Yep. Okay, what's the question? 100%.
So how is this currency volatility that we're seeing, how is that going to play out?
All right, so who knows? I'll tell you what tends to happen. Volatility usually starts in currencies, goes to fixed income, and then to equities. That's what we're seeing. All right. Clearly for obvious reasons, Europe is kind of fucked right here. And I mentioned this the other day in the room, going back to the 80s in Japan, I spoke about how what buoyed their equity markets was a so-called triple merit scenario, where you had falling oil prices. Now we have rising oil prices here in the U.S. We had a strong dollar, which was keeping actually capital flows in. Now you can argue the strong dollar is a positive in the sense that actually it's not a positive. It's horrible for earnings, and furthermore, if you want to attract more capital flows on a voluntary basis, I mean, having a war. I mean, if you're a real conspiracy theorist, you'd say, well, and I know some crackpots that gets really dark, and Three Aces knows these people too. Part of the reason they started the war was to force capital out of Europe into the U.S. so we can fund our deficits. But let's not go there. I think we're going to do that kind of room. We got to do this late at night, and we're drinking heavily. But the rise, which you rightly point out, the rise of the dollar is a huge, huge, huge negative. All right. Yeah, okay. And it's interesting. These commodity prices are all going up, even though the dollar's strong. Put that in your dividend discount mile and smoke it. All right. So no, you have rising oil prices. You have a strong dollar, which is bad for the economy. And you don't have rising interest rates, but you certainly don't have falling interest rates. And if it wasn't for this Russian Ukraine tragedy, I suspect bond would be a lot higher, and I think ultimately they are going a lot higher. So I hope that answers your question. I'm sorry to cut you off and be so brief, but I want to bring this room to an end, and I want to get to everybody. So let's just move on. Okay, we have 3 people left who haven't spoken, and I'm going to bring them up. And if anyone else has a question, raise your hand, because we're going to be closing this room in the next 10 minutes. I'm bringing up here. We've got Andrew, followed by Viking, followed by Stefan. Andrew, welcome to the stage. What's up?
Oh, hey, George. I didn't know if Bobby Jay had spoken about this, but with the European banks being so weak, and then today, sort of the J.P. Morgans and Citis I guess they're sort of trying to price in the Russian exposure, with Citi close to maybe over 10 billion. But they do have, these banks are big. They have over trillions, maybe 2 trillion in net assets. So and their tier 1 ratios aren't really the problem. But I wanted to know your take on the banks. We saw some of them trying to de-risk a little bit before this, so maybe they had seen this, foreseen this a little bit. Cities trying to de-risk their book a little bit. They got rid of their Indonesia and Mexico.
Yeah. So Andrew, let me cut you off. I mean, banks, I wouldn't wish them on my mother-in-law. Okay. I think they're a fucking disaster. I don't want to hear about value and all this horse shit. All right. We've now gone from, we're just worrying, the lazy CNBC asshole, FinTwit, Nigerian Demento brother view. Oh, you got to buy the banks because of the yield curve. Are you fucking kidding me? All right. So that's been debunked. All right. I think you've now got you've got an emerging liquidity credit quality problem, transmission mechanism from Russia to the European banks, possibly the U.S. And if you were in the room at the beginning, I read about how explain to me how this might not be a Lehman moment. Taking that page from that great line from the movie Margin Call, Jeremy Irons. Explain to me how we couldn't. This might not be a Lehman moment. Pretend I'm a small child or a golden retriever. All right. So, all of a sudden, if $300 billion worth of Russian assets vaporize, they can't get their hands on the money because it's stuck on the SWIFT system, and then you get payments failing and so on and so forth. The domino effect. So no, I would run, don't walk away from the financials. I think they're a fucking disaster. I think value. They're not really cheap either. I mean, if you look at J.P. Morgan just as an example, all right, which is the quality bank, okay. I mean, give me a fucking break. This thing is on. Hold up here. It's 1.5 times book. It's not cheap. I mean, so what? And if we get a bear market, they're gonna have markdowns. I mean, the volumes are gonna go down. No,
George.
no.
Also, the book is suspect. Let's be honest. The book is suspect in all these banks.
Yeah. So, here we'll save for another room. But here's forgotten more of banks than I'll ever know. No, this is a value trap. Stay away from financials. Sell, sell, sell. All right. We got Stefan. What's up, Stefan?
Hey, George. Thanks for having me on here. My question is for Shabam. Hey, Shabam, why do you think the shale guys are not coming on with additional barrels right now, with oil at $120 a barrel now? And if they're not going to come on and supply the market, who is going to bring the additional supply, the 2 or 3 million barrels that are needed to bridge the supply-demand gap?
I think you just made the bull case for holding oil commodities for the next 3 to 5 years, right there.
Yeah,
that's
exactly.
there is no answer to your question. And as to why they won't bring it on, there's 2 reasons. One, management is now getting paid for cash flow instead of production, and management's going to look out for themselves. They don't care about the American consumer or the public. If they get paid to get cash flow, that's what they're going to do. And that's very different since 2014 when they were getting paid for production growth. And B, their inventories are not as good as they were telling you. They were telling you they had 30, 40, 50 years of inventory. It's only 10. So now if they increase production by 15, 20% a year, they only got 5 years of production. And guess what's going to happen after that? The management's going to get fired. So that's not what they want. So they want their cushy, cozy jobs, and that's what they're going to do. So look at human nature and human ego. You can always find a story there.
Yeah,
Thank you.
Shabam, it's perfect. Again, Charlie Munger, please call your office. You show me the incentives, I'll show you the outcome. You hit the nail on the head. All right, O'Hare, I've lost track here. Who hasn't spoken that's on the stage? I've lost track. Is anyone on the stage not spoken? I can't remember who hasn't spoken.
We had Van Verse is up.
All right, so yeah, Van Verse, what's up, man?
Yeah, hey George, how are you? So, looking at the market, higher interest rates, higher commodity prices, I think emerging markets are going to get hit. Many banks will have problems, liquidity issues. My question, what's the conventional wisdom about the impact of liquidity issues on Bitcoin and the crypto market in general?
All right, so just I should state this if it's the first time in my room, I'll be polite to seem like a nice guy. We don't discuss crypto in polite company. Okay, I think crypto is a complete pile of shit. If you want to go find people to have a sort of mutual admiration society, there are plenty of spaces, Twitter spaces, and clubhouse rooms for that. This is not the place for fantasy. So I'm sorry, but I am seriously anti-crypto. It's proven yet again. It's not a store of value. Thank you for asking the question, giving me a chance to shit on crypto. It's not a store of value. It's a number go up, up to the right, and it's complete fraud. Michael Kantrowitz, Kantrowitz, smart dude, cornerstone, macro got taken over now. Piper Handler. I think I got the names right. They keep merging all the time. But Michael Kantrowitz has got all the numbers. Shows clearly it's a fucking scan job, risk asset. We have a lot of smart people in the room. We're not going to do crypto. So how do I talk about crypto without wanting to talk about crypto, right? So I think I answered your question. All right. So
hey George, Hattie asked a question about what would be a great short relative to the oil. If you look at Uber, it's structurally bankrupt with negative working capital.
Yeah, 3 aces. Let's just hold that. All right. I'm sorry. So I want to bring this room to an end, but before we do that, I see we have one question from Seppo. I'm going to add him, and I see a couple friends in the audience. If they want to weigh in, either a question or an observation. Our good friend Dave Collum is here. Michael Green is here. Oil God is here. Marcellus is here. Deerpoint is here. I mean, a lot of really smart, good friends here. If anyone's got anything they want to say, speak now, forever hold your peace. Otherwise, Seppo is going to speak, and he's going to be the last speaker. Seppo, welcome to the stage. What's up?
Okay. Earlier, you guys were talking about Ukraine being like Finland. Well, I grew up in Finland after the Second World War, was born there during the war, moved to Western Finland at 1.5 years old. So I lived my entire youth in the shadow of Russia. Now, times are different, of course, now than before, because Finland was a very poor country before the war, and it was a very poor country after the war. Now, Russia put war reparations on Finland, where they had to develop, and they developed a metalworking industry. So once the war reparations were done, they had the metalworking industry, and they started to sell all kinds of equipment to Eastern Europe. So the point of this my statement is that Ukrainians it would be best for them to just give up right now. They can develop under the Russian shadow very well over the next number of years. So this fighting should stop right away. Now, the other thing which we talked about, you mentioned that this business about the shortage of oil. And I've said it before, you cannot get any more oil out of these old fields. I mentioned yesterday, I think, that 50% of the world's oils comes from 1% of the fields. Those 1% are the largest fields in the world. There are 500 of them. And we know how old they are. We know how long they have been producing. And we know many of them that they are declining. So I don't think you're going to get much more oil, no matter what the price is. Thank you.
Wow. Fantastic questions. You're right. Shabam, you want to say something?
I think for those who are not following Seppo, he has an incredible YouTube channel and has written a lot of papers on oil production and conventional oil decline. So I wouldn't take his word lightly. I think there's a reality to this that the people have ignored. Energy ignorance is at an all-time high. I'm seeing Twitter posts today that OPEC is a corrupt this, and shale should be doing this and that from people who have no idea of what they're talking about. So please spend time reading into the oil and gas industry, where supply demand comes from. That's all I can say, because it's not about investment, it's about just understanding what runs the world. And I think it's very important going forward that we need to teach these things to everyone. Thank you.
So Shabam, everyone should follow Seppo. He's got some good stuff.
No, by the way, you guys, is that any serious people who want to get in touch with me, you know how to get in touch with me. I'll be happy to discuss this thing in length.
Yeah, Seppo, we know where we live. We'll find you, and if we can't, we'll ask Shabam. All right, thanks for that. That was a brilliant question. All right, so we're gonna let's see. We got a couple friends here. We're gonna do Oil God and Sohaib. Oil God, what's up?
George, thank you, and fantastic space. I was very much enjoying listening to this whole thing, and obviously, just from the hashtag, where my allegiances lie when it comes to a portfolio. What I will say is that I think it does extend to other commodities, and the only thing, and I'm sure somebody in this room has brought this up, but you look at war, you look at human sacrifice, dictators and oligarchs and authoritarian regimes don't give a fuck about human life. This is about resources and control and going into the next 10, 20 years. And this is about reducing the United States' influence on parts of the world that for the last few years have had a hell of a time negotiating with Russia, OPEC, China. These are going to be emerging markets like India, obviously lots of parts of the Far East, and really people that look at the United States as a hindrance to the growth of their own people and populations. It's not very popular to say these things over here in Western society, but there's people in the East, they don't really give a fuck about us. And right now, they've got two of the largest armies, largest, authoritarian dictators working together silently, and they've negotiated this shit for years. So if I was us, and all I'm going to tell you is, don't wait around for your politicians to save you. Stock up on the things that you need and invest in the things that are going to become scarce. And I'm not talking about Bitcoin, all that bullshit. That's going to all go to zero if liquidity dries up. What I'm talking about is exactly what Shabam is saying, which is oil, because all these smart, clever people who are trying to connect the dots today in 2022 follow the Canadian oil mafia. We give you the energy education. There's absolutely nothing coming online that's going to, quote unquote, white knight any of this shit. That's going to go anything with steel, copper, and all of the other resources. Buy low, sell high, Fibonacci, technical, go for it. I don't give a shit. All I'm telling you is if you think of the next 5 years, all of these motherfucking politicians are going to get the rug pulled out from underneath them. And your point about the Republicans landsliding, absolutely unequivocally accurate.
Right. Sorry to interrupt you, Oil God, but you and I spoke earlier today about what a sewer Twitter is, and don't worry, I'm not going to go there, but I just want to make a point. So, Oil God, you're a smart guy. How would you assess and I don't know how long you've been in the room, but when you look around the room at Shabam, O'Hare, Sohaib, Abe, Three Aces, Michael Green's beneath you. We had Tom Thornton in before. I see your Deer Point's in here. K-Fab's in here. We had Mark Newman in here. We had Tony Greer in here. Okay. How would you describe the sort of investment IQ of this room?
I would say it's about as high as you can get.
Okay. So I want everyone to fucking dunk on this asshole. All right. This piece of shit. I'm going to tweet this out. Okay. Some guy called No One Forever. I'm calling him out and he's blocked. He's going to get pissed now. But Oil God, we got to fucking clean up Twitter, and I'm imploring you and everybody else in this room. I'm going to tweet this out, okay? This prick. Hear me out. Hear me out.
You don't engage. What you don't do is you don't even acknowledge them. They're beneath.
No, but hear me out. No, let me finish this. I just want to show you the pieces of shit that live in the sewer that's known as Twitter. This guy writes, and his name is No One Forever, okay? Just No One Forever. He's at New Times DJ. This is a first-class piece of shit. Question: does anyone in your group
That's
have the slightest?
oxymoron. There's no such thing as first class pieces of shit. They're all scum.
Okay. Oh God, hear me. Let me finish, please. Okay. Don't be an asshole like George Noble and keep interrupting me. Okay. All right. Does anyone in your group have the slightest clue at all of how to actually trade? Question mark. I'm not sure I'm hearing it. Just a bunch of gibberish. LOL. Like, oil God, what am I supposed to do with a pile of garbage like that?
Listen, George, you have to ignore it. There's too many morons on Twitter. Like, there's too many more. Do you want to go lose your hair? Go to a Bitcoin room and listen to the people pumping each other up. You can't save everybody, George. The people who are on this call are the same people that follow all of us around because they're like-minded individuals. That are many of them friends, right? I look down. I care for Abe. So Abe, Three Aces, Shabam, Deer. A lot of these people, whether they are trading with me or against me, I didn't give a shit. All I know is I respect their opinion and I'm willing to listen to it. These are morons. You're not going to be able to save them. Let them go.
Yeah, I'm going to let them go. But more importantly, how do we rid Twitter of these assholes?
We're gonna smoke some marijuana and we're not going to worry about them.
The same way COVID rid all the COVID imbeciles of the world. The truth always wins. It always does. Just like ESG is going to come back and rip all these people's heads off. COVID came back and ripped all their heads off. We just got, all we could do is tell the truth. I mean, unfortunately, the lies travel, instantly, and the truth takes years sometimes, to spread. So, we just got to keep telling the truth, George. That's all we can do.
Let the money do the talking. Post your returns, short their indices, whatever you need to do. I mean, I'm too embarrassed to tell people.
But hey, Oil God, real quick, because I know George wants to wrap it up. Shabam, I just have a question for you, my brother, and you know that you are my God, and I absolutely love every single thing about everything you write and do. But hold on, I have a question, please. So Shabam, I've spent the last decade in the emerging markets, right? I'm looking at the dollar just absolutely annihilating all of these local currencies. And then on top of that, the commodities, including the oil and stuff. I mean, this is gruesome. Okay, I'm just curious. At what point do we start to see the real demand destruction? Forget about here in these goddamn bubbles that we live in. In the Sierra Leones and Ugandas and these places like that. I mean, these little taxi cab drivers running around, $3. Look at Uber. I mean, Uber's got a huge footprint overseas. I mean, it's like, there's got to be serious demand destruction at some point here, like now, with the dollar, and the double whammy of the dollar relative to the local currencies and the price of oil. Do you have an insight there, please?
Sure. Yeah. So I don't have any exact numbers for you, but I'll make 2 points on that. The first one is that a lot of these countries have a ton of tax on gasoline, on diesel, on gas and whatnot, natural gas, propanes, etc. The big uprising in Kazakhstan like a few months ago happened because they raised the taxes, or they were not providing subsidies, something like that. So there's a lot of levers they can pull with reducing these taxes. So that's number one. The second thing is that the people that use petroleum products in emerging markets have a lot of money. It's the upper middle class and even the lower middle class who have these motorbikes, and they got little cars and whatnot. And the cars in India get like 50, 60 miles per gallon. The motorcycles get like 200 miles a gallon. So, these people have enough money where it doesn't really affect them anyway. It's the poorer people who are just getting into using propane and just bought a motorcycle. They just bought them, who are going to suffer.
I mean, generators and all that stuff. But here's the thing. Hang on 1 second, please. So Shabam, just to add to that, right? So in most of these emerging countries, 85, 90% of the GDP is in the shadow. There are no taxpayers, right? You're in a Sierra Leone, there may be thousands of taxpayers, right? So the way they collect money is through taxes on utilities, imports of diesel or fuel, and also imports of goods. So, if you take a country like one of these shit little countries that we're talking about, and you take out, basically a third of their tax revenue, these countries have real revenue problems. The United States doesn't have a revenue problem, it's got an expense problem. But you take any one of these countries we're talking about, these emerging countries, they're desperate for revenues. Almost everything is done in back alleys and cash and no invoices, no taxes, no VAT, no nothing. So, I just, in terms of the tax, holiday like we're seeing in
Smells.
Alberta and Florida and other places, just wanted to add that to that there for you.
Yeah, you betcha. And if I can just make a comment here, is that, oh, I totally forgot what I was going to say. Sorry about that.
Shabam, don't worry about it. There's always another room. We'll do it again. All right, listen, guys. This has been only 3 hours and 10 minutes. We're making progress here. It's sort of like, Major League Baseball games or football games. I got to figure out how to shorten them. But you guys just keep wanting more. It's like you guys want 5-hour marathon sessions. But whatever. I'm getting old. I can't do this anymore. All right, so listen, guys. We're going to do this again. This is 3 days in a row. O'Hare, I can't thank you. Hey, Sohaib, real quick, you got something quick? I mean, no commercial messages, please, for the Canadian Oil Mafia. If you got something important, that's fine. But otherwise, I want to close the room. Sohaib, you got anything?
No, just no commercial. I just all of the. I just left meeting one of. Okay, I'll leave it for another day. Take
All right,
care.
no problem. And do me a favor, guys. I just tweeted out this jackass. Could you please like the tweet and forward it as much as possible? I want to humiliate this motherfucker. And this room is being recorded, and this motherfucker can hear it, and I'll keep saying it. So please like and retweet the tweet I just put out, guys. I want to thank all of you: O'Hare, Shabam, Three Aces, Abe, L'Enfant. I mean, you're all wonderful, and Tony Greer and Thornton and Newman and Justice. These rooms only work because you guys make it work. This is awesome. I'm just the ringleader. We'll do it again. Stay out of trouble. Don't be long. Take care. Good night, guys.
See ya.